All right. Hello, everybody. Welcome back to another episode of The Market Closes Monday, March 23rd. We've got 15 minutes until the market closes, and hopefully for these next 15 minutes, I'm not late. I'm on time. I wasn't as early as I was this morning, but I'm on time. Hopefully in the next 15 minutes, nothing happens, and we can just keep some of this momentum going. S&P 500, 1.49%. You know that it's a green day when CNBC starts putting up the green banners. And they've got Tom Lee on right now, which we'll take a look at in terms of what he has to say with the green banners below. It's finally a real green day. And boy, have we had to escape a myriad of headlines over the past 4 hours since I did the market open to get to this green day. And I hope we can escape in the next 14 minutes with that green. But it looks like we're going to be having a green day. S&P 500 up 1.5%. ASML's up 4%. Nubank's up 6%. Ondas had a good earnings this morning. Double their expectations for revenue growth into 2026. That's up 9% on the day. Tesla's up 4%. GE Verinova's up 4%. Palantir, what a phenomenal day for Palantir. Look at that, 160.65. That's almost at the high of the day. We hit 160 back at like 11 a.m. Then we gave it up. Then we hit 160 again about an hour ago. And now we're hitting new highs of the day at 160.64. Not too bad for Palantir. Meta, 580 to 607. DraftKings up 2%. Intel's up. Viavi is up in the drone space. Synopsys is up. AMD is up. You're just seeing a bunch of different names get a ton of momentum right here. Aero Environment, Ondas, Kratos, etc. Apple, that's up 2%. So what ended up happening? What ended up happening to keep us green? Well, you had a lot of headlines, but the majority of those headlines made an argument around the war continuing to come to an end. Trump had another press conference. He had one press conference in the morning. He had another kind of like phone call with a bunch of reporters. And then he had a final press conference during the day. I think this was in Tennessee, where he was speaking at a conference with Peaks Hegseth Pambondi. And once again, he said, I want the war to end, and I want the war to end soon. And as a result of that, I think you're seeing some of this momentum. Here are the three things he said, and then we'll look at a couple clips. He said, Iran also wants to end the war and settle it and get it done. He then said, we've been having very good discussions with Iran. And he said, this time Iran means business. Again, this was the third time that Trump spoke to the media today, not in the week, but literally in the past 7 hours, about wanting to get a deal done with Iran. Now, again, the big thing that came out this morning was Trump delaying the power plant strikes that he threatened for 48 hours on Saturday that he was going to do unless the Strait of Hormuz opened. The Strait of Hormuz, to my understanding, is not open, but Trump said based on the discussions that they had, that is why he will delay those strikes for another 5 days. And as a result of the delaying of the strikes, the markets have been able to catch a bid. And realistically, the markets like this, look at crude, down 10% on the day. Not too bad at all. The 10-year, which was pushing 4.5% this morning, is down to 4.3. 4.3 is not that good, but at least you're getting some of the bond markets calm down here as investors are buying these bonds and sending these yields lower. So I guess whatever Trump has been saying has been working, at least based on price action today. The question is, will it be able to continue to work? Now, there's a lot of different nuances to the headlines that came out this morning, and a lot of it needs to be discussed. So first off, we had an Israeli official 3 hours ago, I don't know if this is true or not, but this is an Israeli official, and maybe it's true, maybe it's not, say Washington has set April 9th as the date to end the war on Iran. Again, it could be not true. Maybe they have bad sources. But I find it kind of ironic that the day Trump tweeted, it's a great day to buy, and ended the 30% drawdown we were having on the S&P 500 in 2025 was also April 9th. So, I mean, I don't know if Trump is trying to go 2 for 2 and play with us here, but you had this headline this morning that was super important. Potentially April 9th is that day that we are going to see the agreement on the ceasefire. Then you had Israeli's Channel 12 report that Iran has already agreed to a 5-year freeze on their missile program. Iran has not come out and said they agree with any of this, but you have the Israeli news media saying that, hey, Iran is ready to agree to a 5-year pause on creating their missiles, which maybe is part of the sort of negotiations that Trump has been having as well, which is potentially going to lead to that ceasefire coming through. And then you had an Iranian official tell Al Jazeera about 30 minutes ago, the U.S. has so far rejected our 2 main conditions. What are the 2 conditions? Number 1, payment of compensation. And then number 2, recognition of aggression against us. The issue of closing the Strait of Hormuz is still on the agenda. So the Iranians are disagreeing with everything that the Israelis are saying. The Israelis are kind of disagreeing with what the Americans have been saying. And the Americans have been saying that the Israelis and the Iranians are wrong. Trump this morning literally said that the Israelis are not the Israelis, the Iranians are lying, that we did have a conversation. The Iranians came out this morning and said there was no conversation last night. Trump said there was a conversation last night. So you've got a big game of he said, she said going back and forth. And right now the markets are defaulting to what Trump said as the truth, which is the interpretation of this idea of the war ending. Then you have a couple of updates that also just broke. Turkey has been talking to Iranian officials and President Trump's envoy, Steve Witkoff, in an attempt to secure a brief ceasefire for peace deal negotiations. So as per the Financial Times, you might have Turkey getting into the negotiating ring. And then you had the Financial Times come out an hour ago and say that Pakistan is positioning itself as the lead mediator between the U.S. and Iran amid peace talks. Some of the details. Pakistan is using its ties to Iran in warm relationship with Trump. Pakistan has pitched Islamabad as venues for talks in the coming days involving senior figures from the Trump administration. Pakistan's Army Chief Asim Munir spoke with Trump on Sunday, as per the Financial Times, and Pakistan's Prime Minister held talks with the Iranian president on Monday. So it is kind of crazy that you've got all these other countries from Asia and the Middle East coming together saying, hey, we can be the way to navigate the war and how it's playing out. Usually the United States ends up being a mediator between two countries. This time, we potentially have two other countries helping us mediate the war. But regardless of if it's true or not, the market is interpreting this to be true. And as a result, you're getting more excitement right here. By the way, Israeli media, this was reported about 15 minutes ago. Netanyahu is concerned about the possibility of America reaching a bad deal with Iran. Netanyahu has summoned government coalition leaders for an urgent meeting regarding U.S. talks with Iran. That is coming from Israeli media. So that's not being reported by U.S. media, but rather Israeli media, which makes sense because the Israeli military so far is not necessarily happy with the deal that the United States would be able to achieve, as per the reporting that we saw this morning. You've just got so many different stakeholders, so many different companies coming in, or so many different countries expressing so many different points of view. And the market's defaulting to, hey, we think this is going to end soon, which maybe is the wrong point of view. But if we end out 657 on the day, we were almost below 640 this morning, and the war does come to an end, maybe that will be the right point of view. Here was Trump about 2 hours ago, and some clips on what he said about the war.
And then, unfortunately, I called Pete, I called General Kane, I called a lot of our great people. We have great people. And I said, let's talk. We got a problem in the Middle East. We have a country known as Iran that for 47 years has been just a purveyor of terror. And they're very close to having a nuclear weapon. We can keep going and get that 50,000 up to 55 and 60 is no end. Or we can take a stop and make a little journey into the Middle East and eliminate a big problem. And Pete, I think you were the first one to speak up. And you said, let's do it, because you can't let them have a nuclear weapon.
So you got Trump right there making the argument that Pete Hegseth, the head of the Department of War, was the first person to suggest we go into Iran. And then he reminisced on the good old days of 3 weeks ago and the Dow being at 50,000.
In addition to all of this, we're working on so many different things. You know, our economy was fantastic. We had a Dow at 50,000. They say it couldn't happen in 4 years. It wouldn't happen during my term. But if I got anywhere close, it would be a great success. Well, in my first year, we hit 50,000. And in addition to all of this,
you can just tell the pain in his voice. he's like, well, I'm sorry. You know, he's like, we had the Dow at 50. It was great. And now it's not. And you could obviously tell he wants the Dow to get back to 50. And I think based on all the things that he said this morning, it looks like there's a good shot, if we could end this war pretty soon, that the markets would be ready to give the Dow that momentum. The Dow Jones right now, as we get into the close, 46,287. It's up 709 points on the day. Again, it is not losing that momentum. And same thing with the S&P 500. It's not up to 2.2% it was at the very top of the day, but 1.5% is not the worst in the world. Here's what Mr. Tom Lee had to say about some of the sentiment that's going on right now. As you can see, CNBC busted out the green banners, which means at least it's somewhat of a green day.
Here, and it's not clear that other party wants to come to the table or is willing to.
But I might just add, because as you can imagine, we've had many conversations with institutional investors.
I'm sure all you have.
They're all bracing for a long war. In fact, over the weekend, a lot wanted to short the market into the open today. In other words, they were getting ready to try to bet on a big decline. So to me, I think what Chris is saying, which I don't disagree with, it could be a long war. that's a consensus view in many ways. Nobody is under the illusion it's a short war, but that means that this asymmetry of incoming news could actually be positive. So I'm kind of in the camp that we have to see how markets react. But like today is, if we were skeptical, the market should be going down, but instead we're actually rallying today.
Well,
it could happen in 5 days. I do think one thing we have to keep in mind, and I think investors who think the war needs to end for stocks to bottom aren't studying history. You know, markets will bottom well before positive news starts to develop. In fact, stocks bottom on bad news. So to me, I think what we have to start really focusing on is positioning and how markets are reacting and what's sort of leading. And you know, even Citadel's trader was talking about that today, that there's so much asymmetry and sort of bets on the market falling that it doesn't mean the war has to be ending for the stock market to actually
no, but
bottom.
the effective closure of the strait needs to be ending, doesn't it? Or else you're going to give back whatever goodwill you've put in the market now.
Yeah, that's right. It's the closure is putting intense pressure on more than just the U.S., right? It's putting pressure on China and the Gulf nations. But one thing that is pretty evident now is the U.S. is faring better than everybody else in this, because we are essentially energy independent. We're an exporter of oil. And I know there's confusion on what the Fed should do, but at the end of the day, the U.S. may be in the best strategic position with that strait closed.
So Tom continuing to make this argument right here that although there is so much skepticism, and he's talking about the institutional clients that he spoke to over the weekend, the fact that, by the way, look at Palantir, dude, going for 161 to the close. The fact that all these clients wanted to short the market going into today, that is why if you're scrolling through X, you saw all these tweets around Black Monday happening, because, I mean, so many people were afraid that if Trump bombs the power plants and the war continues, and there was just a lot of negative sentiment. We saw that in the futures action last night. There you go, 161, baby, right before we get into the close. Ironically, the S&P actually getting some red candles as we get into the close. Palantir seeing nothing but green right there, up 7% on the day for Palantir. The most important thing today was, hey, can we not bomb the power plants? And Trump came out early in the morning when around 7 a.m. when things were really looking ugly, and he pivoted. And as a result of that pivot, that's what the markets wanted to see. Now the question is going to be how much the markets believe in this pivot. I mean, they're giving him the benefit of the doubt to give him the premium to the broader market right here. Iran came out, by the way, and their foreign minister said Trump is manipulating the credit and equity markets. Literally, they were like, he's just manipulating the markets and saying stuff that people want to hear, but it's not true because we didn't talk to him. Obviously, Iran has their own agenda to be able to make those statements, but it worked. If he is manipulating, it worked, and it will continue to work if we actually get to a compromise on this ceasefire happening, which time will tell. But as of now, bond yields have calmed down. The markets are up. Zeta's up 4%. IGV's up 1.74. Even SoFi, Muddy Waters was on CNBC this morning. That's up 1.5% of the day. Coherent's up. IREN was up 7%. Now it's up 2%. I don't know why Nebius is down. That's very weird, actually, why Nebius. I mean, the dilution stuff was last week's news, so I don't know why that still matters. Oracle, IREN, CoreWeave, all of those are up today. So I'm not sure why the NeoClouds got hit, or not sure why Nebius got hit out of all the NeoClouds. But that one is down today. Celsius right there down 4%. Looks like there might be a bad headline on Celsius. We'll see if we can find something. We got about a minute until the close. S&P, how are we going to close? 1%. Okay, so for all the people that voted on the market open poll saying, will we be up 2%, 1%, or 1.5% by the end of the day, or red, if you voted 1%, which is the majority of you, you were right. We gave up 50% of the gains that we had at around 11:30. We were up 2%. Now we're up 1%. But 2% is not the worst in the world. Estee Lauder is down 8%. Estee Lauder nears a deal to combine with PUIG. I don't know what the hell PUIG is, but I don't think the market likes that merger. That's down 8%. Oh, Nebius issued their notes today. Okay, well, that explains it. So I guess the market hadn't fully priced it in, and that's why that stock was down 3% right here. All right, Monday, March 23rd, 4 p.m. The stock market is now closed. We're done for the day. We are done for the day. Spotify just cut 3% of their podcasting team, which is not that many people. It's 15 jobs. That sounds like such a scary headline. It's like it's 15 jobs. That's not too bad. And then the FAA just said the runway at LaGuardia Airport will be closed until Friday. Wow. So this airport stuff still not getting better. S&P 500, 655. We closed up $6.85. 1.06%. Celsius was down 4%. Palantir, 160.90 on the close, up 7%. An incredible day for Palantir. Again, we talked about that Maven contract, or the potential for an increase of that Maven contract in the morning based on what the White House said on Friday. Palantir's Maven becoming a program of record, so that seemed to be pretty bullish today. The Nubank, that's up 5%. Ondas was up 8%. BM&R was up 1.53%. Robinhood Ventures actually crossed above 25, 6%. Not too bad. That's the price that they IPO'd at. Tesla, 380. That was up 3.5%. VG ended up going flat on the day. It was almost 18. But then you had Trump pivot on the oil stuff, which is why VG, NextDecade, LNG, they all ended up dropping or at least going flat from those levels. Broadcom, great day. That was up 4%. Redwire, which was red on the day, that was ended up 2%. Rocket Lab ended up about 1%. The airlines also got a little bit of a relief after those oil prices started to calm down. Google, basically flat on the day. MicroStrategy did issue up to another $20 billion to dilute, to buy more Bitcoin. They also bought another 1,000 Bitcoin. That stock up 2% on the day. SoFi at 17.15. Also, BTC, 70,000, below 71. But the fact that we are at 70 is not the worst thing in the world. Red Cat, was that up? Wow, Red Cat. I didn't even see that today. 14%. This thing was down 17% on Friday. Talk about a pivot right here. Maybe Ondas earnings also helped Red Cat. Yeah, it bottomed at around 12. Even today, it was at 12.65 early in the morning. So you got a pretty big move from 12.65 to 15.15 as we're seeing more of that momentum. Yes, MicroStrategy was $21 billion of dilution. Vertiv, how was that on the day? They just got into the S&P 500. That was also flat after going green. Hit about 270, now back down to 256. All right, so let's get into all the headlines we got. Mr. TJ will be joining us in about 30 minutes, and we will have TJ on the show and talk about kind of his strategy and what he's been doing in the options market as well. Let's get an update right here on the war, as it looks like quotes from the Iranian parliament, and then we will get into all of the other updates that we've had over the past couple of hours. But look, not bad price action, right? Not bad. We all wanted a green day. Now we have not been able to have 3 green days in a row. We've barely been able to have 2 green days in a row. So let's see what happens tomorrow. But at its core, not the worst thing to see some of this momentum. And now it's just a question of if the markets actually believe Trump going into the rest of this week.
Attention to that deadline. And after he told reporters today that he's considering a post-war power-sharing agreement with the new Iranian government for sea traffic through the Strait of Hormuz between himself and the new Ayatollah, whoever that might be, he said. But the Speaker of the Iranian parliament said today there have been no negotiations, and Trump's statements are what he called fake news used to manipulate financial and oil markets. For his part, the president also today again cited that Venezuela model for post-war governance of Iran, saying he's dealing with people he finds to be very reasonable and very solid there. He told reporters that the U.S. may be able to find a leadership figure to deal with in Iran. And he predicted again that when the conflict ends, the price of oil will drop like a rock, but cautioned that he can't guarantee anything. Guys, back over to you.
We do not know, though, Eamon, who specifically Trump or his parties are talking to, correct?
We don't know. And we don't know exactly what's been discussed. We don't know. You heard the president in that soundbite saying that talks began sort of on Saturday and through Sunday. We don't know where these talks are taking place, if they're physical, if they're telephonic, or what. But, you know, clearly the president is seeing something that he feels is encouraging in all of that conversation.
Someone said the U.S. is talking to an Iranian chatbot, and that's crazy. That is crazy. But Trump is saying it's a real person. He even said this morning he doesn't want to mention who the person is because he doesn't want them to get killed. But, you know, he insists that he is talking to a real person. You got Turkey and Pakistan insinuating that they are the intermediaries between Trump and this person. AAOI, that's jumping about 2.4% after hours. We got a headline right here. They got a new order for 800G of data center transceivers, $53 million order. I believe this is from a hyperscaler. They did not name which hyperscaler, but this stock, very popular in the photonic space, has had a massive run this year. $7.2 billion market cap. They just diluted by about $500 million over the past couple of weeks, which is why the stock got hit from 120 down to 85. Now making a move after hours. It was also up 10% during the day. I mean, it's also a very small float. So, very easy to move all the way up and then all the way down. Lumentum was also 3.2% on the day, and then Coherent, another photonics name, that was up 0.56% on the day as well. Grab had big news this morning about acquiring Food Panda's delivery business in Taiwan. You had multiple analysts come out and raise their price targets or maintain their price targets. You had Barclays at 7, you had Morgan Stanley at 640, you had Bank of America at 620. Our good friend Amir actually ended up doing an entire equity research report on the company. I will link it right here in the chat. You can download it for free. He does a really good job on this stuff. I mean, this looks like institutional grade. He came out to an intrinsic value of $7.25, which is about a double from the current stock price. So I will put the link right here in the chat if anyone wants to download it and read his entire piece. Does a really good job. And a lot of his analysis is really quantitative, even more than qualitative, to come to a fair intrinsic value, which is essentially you can call like a price target. So for people that want to download that, you can check it out there. Grab was up about 2.5% on the day. Okay, so let's get into some of the other major headlines that we had. As we're navigating some of this stuff after hours. Rocket Lab, again, great day as well, up 1.1%. Could not get above 70, but they did have that dilution that they announced last week, which is kind of what hit the stock. And then ASTS, Lunar, all these names ending either flat to red on the day or slightly red, as they were green in the morning. Ethereum right there, 2153 after hours. By the way, there is a video that's going viral about a girl who is talking about Claude Code. I'm not going to play the whole thing because it's like 5 minutes, but somewhat Gene, shout out to Gene, he sent it to me today. And it's so funny because this girl is like in her car and she's like telling her TikTok how like valuable Claude is, because she's been trying to build a website for like 10 years and she didn't know how to do it. And then she finally told Claude what to do and it did it in like 2 hours. It's literally similar to my story. And it's going super viral. So it's just funny. I mean, a lot of people are starting to recognize how unbelievably valuable AI is for just these basic tasks like building a website. And then when you take it to its logical extreme about what AI can do, it gets pretty exciting. And you're seeing more of those videos begin to go a bit viral. Tesla right there is flat after hours. I don't know what happened with Celsius. Wisdom Tree, by the way, announced an offering of 525 million convertible senior notes. Is that stock down after hour? Wisdom Tree is down 8%, not 8%, 5% after hours. I don't think there's that many people in retail that are long Wisdom Tree, but they are issuing some convertible notes similar to a lot of other companies that have taken advantage of their stock going up. Celsius closed down 4.5% after Costco released their own Kirkland energy drinks directly competing. Wow. The market's really sending them down on Kirkland Energy. That seems like a really dumb reason. I get there's going to be competition, but Celsius has a legit brand. I wouldn't think that would just die out because of Costco. Micron, that's flat right here after hours. That was down 4% of the day. I'm not sure what happened to the energy names, or sorry, the memory names. SanDisk was down on the day. Micron was down. Samsung, SK Hynix. You would think that they would get some love. Micron and Nebius were two of the main semiconductor names or in the semiconductor ecosystem that ended up going red on the day. UNH as well ended up going red. So the healthcare names, some of the fintech names, and then the memory names ended up going down. Again, Nebius probably issued their convertible notes, which is what put some pressure on the stock. By the way, speaking of all the AI excitement and momentum, that has been going viral with people talking about Claude, Jensen did Lex Friedman today. By the way, here is also the link to this Kirkland Energy. I mean, I'm curious if people try it and it tastes as good as Celsius, because if it doesn't taste as good or if it doesn't make you feel as good as Celsius, then people are just not going to buy it. So I guess we'll find out, but I don't know if that's a good enough reason for Celsius to go down. Where did the VIX close on the day as well? Let's take a look at that. The VIX ended down on the day. Wow, no, the VIX ended only down 1.8%. Goodness, the VIX was down 10% at one point. By 12:30, it was actually green. I mean, that's not the most encouraging, but that is crazy. The VIX ended up flat. I mean, down, but like basically flat given where it was earlier in the day. And that's probably why we saw some downside momentum as well, as the S&P lost 50% of its overall gains. All right, so let's pull up a couple of different clips from just some different things that came out today. Again, Jensen did do Lex. He had a bunch of different quotes that he said, which I thought were really interesting about what's going on around AI. But before we do that, real quick, few more headlines. So this I thought was also really interesting as well. Somewhat, we're still below the 200-day moving average. That is correct. So hopefully tomorrow we might have a chance to get above it, but obviously it's going to take some time to get above it. Take a look at this. So at 6:50 in the morning, $1.5 billion worth of S&P 500 futures were bought. And the move was so big at 6:50 that the entire index jumped about 0.3%. 5 minutes later, or 10 minutes later at 7 a.m., 7:04, so 14 minutes later, Trump tweeted, the peace deal talks with Iran are underway. We added $2 trillion of value by 7:10. Someone knew. I have a theory on who that someone is, and I'm not going to name any names, but I will just share this GIF that I tweeted underneath that. I think it's kind of obvious who had access to $1 billion to be able to buy those futures. I don't know, but I mean, this is just crazy. This is absolutely freaking crazy, and the fact that there is this level of manipulation in the market. I mean, yeah, maybe there was a coincidence that $1.5 billion of futures were bought right before Trump tweeted what he tweeted. But it doesn't feel like that. And as a result, it is kind of crazy to imagine that happening. So definitely it feels like some people knew. Amazon was up a little bit on the day. We got some news on that. Amazon announced that it has launched 200 internet satellites to date and has another 200 stacked and ready for launch. Every satellite adds coverage and capacity to the network, while Amazon secured an initial block of 80 launches to support our first generation satellite constellation. We have also got an approval to deploy a second generation system, and we've continued to secure launch capacity to help accelerate near-term deployment plans and support our longer-term plans for Amazon Leo. So you're seeing more and more satellites get into the air from Amazon, which is nice to see. And as a result, I think Amazon continues to be one of the most undervalued names in the market that is incredibly diversified, but unfortunately their free cash flow is negative. Amazon was up 2.38% on the day. It's another perfect candidate, in my opinion, for covered calls. And that level of negative free cash flow is likely what's holding down some more on the stock. All right, Jensen, let's get to some of the stuff he said. One of the things he said I thought was pretty interesting. He thinks we've achieved AGI.
I think it's now. I think we've achieved AGI.
You think you can have a company run by an AI system like this?
Possible. And the reason for that is this. You said $1 billion, and you didn't say forever. And so, for example, it is not out of the question that a claw was able to create a web service, some interesting little app that all of a sudden, a few billion people used for 50 cents.
So you got Jensen. There was some other good moments of that podcast that we'll get into in a bit. But Jensen making the argument that AGI has already been achieved and that this agentic revolution will only continue. Elon over the weekend once again said that he needs a terawatt of compute, raising the concerns around AI. Jensen did kind of basically shit on the idea of data centers in space. Lex explicitly asked him, hey, do you think data centers in space are that big of a deal? And it was kind of funny. Jensen was like, well, if I thought it was that big of a deal, I would have been the first person to to say that we have data centers in space because, I didn't realize it was that serious. But he is kind of making the argument that the cooling technology and the overall capacity, AGI's artificial general intelligence, is not as easy to secure in space, which is why he doesn't think it's like that important, at least right now. Elon, trying to get people to buy the SpaceX IPO, has a different perspective on this.
For solving it makes some of the energy issues in terms of scaling energy easier.
Cooling issues is not easy. Yeah.
Cooling. Well, there's a large number of engineering complexities involved with that.
Yeah.
So what, NVIDIA has also announced that you're already thinking about that.
Yeah, we're already there. NVIDIA GPUs are the first GPUs in space. And I didn't realize it was so interesting I would have declared it maybe. We're in space, little astronaut suit on one of our GPUs. But we've been in space. It's the right place to do a lot of imaging, because those satellites have really high resolution imaging systems, and they're sweeping the Earth, continuously now. And you want, centimeter scale, imaging that is done continuously for the world, so that you'll basically have real time telemetry of everything. You don't want to beam that back down to Earth. It's just petabytes and petabytes of data.
So I'll link the podcast. People can look through it. But, Jensen mentions that this stuff is interesting, but it's just not as realistic right now. Obviously, super important for Planet Labs, ASTS, Satellogic, which, by the way, Satellogic was up freaking 40% on the day. Not sure why. They had a good earnings. It's a small market cap, small free float. There's only 92 million shares out there, 140 million shares out there. So, one could argue that, maybe just a lot of people got excited, but you do have some space names getting excited based on these space-based data center headlines, and Satellogic right there, almost $5, as that was up 40% on the day. Celsius up a little bit after hours, Micron up a little bit, SanDisk still down, United Health still down, and then Amazon flat on the day after hours, up 2% during the day. APGE announced a $300 million public offering. Dude, what is up with all these companies offering their stock? Apogee Therapeutics is a $5 billion company. It was up 20% on the day. Makes sense that they're now putting out an offering. Stock's down about 2% after hours. But you have Wisdom Tree, APGE, you had Nebius and AAOI and Rocket Lab last week, all diluting, which it makes sense. I mean, they should be raising capital. Even SanDisk did it a month ago at around $5.53 a share, which so far has also worked out. Okay, let's get into a couple of other different headlines that we have after hours. First of all, put in the chat, I didn't ask this question yet, what have you done today? Very curious to see what people did. I did absolutely nothing. Didn't roll covered calls, didn't sell anything, didn't buy anything. Literally just tried to let the market do its thing and see if we can get some more momentum. But would be very curious in the chat to see what people did or didn't do. The Iran CEO was on the All In podcast. We had a bunch of the other Neo Cloud CEOs on the podcast. The Nebius CEO wasn't there, but the CoreWeave CEO was there. So you had a variety of different CEOs join All In. And we'll probably get some clips of them and see what they had to say as well. Wow, most people are saying nothing. Most people are saying nothing. Do people really want to watch this girl in the car talk about Claude? So many of you are asking for the video. Okay, well, we'll watch a little bit of it in a second. Reddit right there. That was up a little bit on the day. Bought Bloom Energy. What was Bloom? Bloom was down 5% on the day. Okay, so that one took a little bit of a hit. I see bought Hood, closed some OnDOS cash cleared puts. I mean, those worked out really nice. 1 week covered calls on a few names. Bought some Bloom Energy, bought some NVIDIA, sold 1/9 of all my positions, did some puts on BM. All right, so people didn't do anything too crazy today. It looks like small moves, and then you just kind of let the market do what it needed to do. I see bought Grab, bought OSS. Dude, OSS has been, for a small cap, this name has been so resilient. I mean, small caps do not hold a range because, so many times they're way too volatile and they're manipulated. OSS has been holding from 8 to 10, which is really good for the size of market cap they are and the potential given the earnings that they just put up. So I actually like it being at these levels. I know Jason has been talking about this counter trend bounce. I was just on the phone with him recently. He does think we are now in a counter trend bounce based on some of the averages that we have been able to reclaim on the S&P 500. However, by the way, we're going to have technical Wednesday. He's not going to be on tomorrow because he's going to be at a doctor's appointment, but we will be on Wednesday. So instead of Tuesday this week, it'll be Wednesday. The core point he made to me was that the TA kind of matters right now, but a tweet matters way more than any TA. And we're having a moment. We got to see if we can continue that moment. And if we can't continue this moment, then, all that TA goes out the window. And unfortunately, we're not going to be able to see the market hold on to this momentum. Okay, here was the girl talking about Claude Code. I mean, this literally sounded like me yesterday, but it's happening. The normies don't know what AI is yet. They just don't. And when they do, we're talking about billions of more people joining this sort of AI revolution, which means a lot more compute.
No, literally, because what the fuck, Claude? What the fuck? Yesterday, no, 2 days ago, I did not know what GitHub or Railway was. I've been trying to build a website since 2018. And I know what you're thinking, Sorbet, that's almost 10 years ago. I didn't know what those two, I don't even know, are they websites? Are they developing apps? I don't even know what they are. I asked Claude to build me the website that I've been trying to build for years. And I knew that it was going to take a lot of coding. I reached out to a real human developer several years ago, and they were like, yeah, that's going to cost you somewhere between $15,000 and $25,000 for me to build for you. I imagine because it's a lot of code, it's a lot of backend, it's a lot of different little moving parts. I literally 2 evenings ago, in 2.5 hours, told Claude what I wanted to build. It built it for me, gave me a preview, and I said, okay, change this. And they're like, okay, now you have a functioning thing, but there's a couple more steps. You need to add it. You need to deploy it on GitHub. And then
I'll link the video in the chat for those that want to listen to the whole thing. It's like another 3 minutes, but it literally sounded like me, bro. It literally sounded like me. And so, I mean, I don't know, dude. It definitely does feel like there is a lot more excitement from people that are starting to recognize how quick this can become. And people are saying, well, what about WordPress? What about Wix and all that stuff? I think when people bring up those counter arguments, you're not getting the point. The point is natural language and just telling something what you want and having it being produced for you is a fundamentally different paradigm than even dragging and dropping or trying to like put your website together by like making your own font and all this stuff. Like because I've used Wix and Squarespace before and all that stuff, and that's still significant more work than vibe coding. And that's the paradigm shift, because to vibe code, you need compute, you need GPUs, you need Claude and Codex to be phenomenal. And for the average person, which when it comes to technology and stuff like that, I'm also a normie when it comes to using it. Obviously, I spend more time analyzing these companies than regular people, but I'm definitely not, an expert on how to use GitHub. For someone like me, it's incredible that it's that easy. And the majority of people are also like me that just want it to be easy. And that is why I think Jensen keeps mentioning that Anthropic's revenue growth at $100 billion by 2027 is conservative. Right now, they're doing about $25 billion, because ultimately it's going to be a lot more than how this ends up playing out. And yes, Wix has base 44, which has done very well to build AI websites. But the point is, this is just accelerating at a very, very fast level. And it's exciting to see. This is going to increase unemployment. I think it probably will as well to an extent. I am bullish on the broader employment sector gaining momentum from AI, but there will inevitably be some commoditization. I don't know what the Fed is thinking around how we don't have to cut rates for this reason. Obviously, they're more concerned about inflation, which I get, but yeah, it's going to be an issue. How do we know a midstreams is an AI? Well, AI is not funny yet. And so obviously it's very easy to tell the difference between something that's funny and something that's not funny. So, it's pretty obvious why this is not AI. Can you walk us through how to build a website with Claude? I kind of need one. Honestly, you don't even need me to you literally just go to Claude and say, I want to build a website. Tell me what to prompt you. I mean, it is so you don't need any help on it. You don't need to watch a tutorial. Like, it is so dirt simple, which is what technology does, right? It makes things easier. It democratizes access and information. You just have to put in a little bit of work of actually like prompting the thing. But as a result of that, it doesn't seem like it's necessarily slowing down. Let's get an update on tech and oil, and then we will keep going from there.
And Eamon just spoke about it, but several officials saying there were no ongoing negotiations with President Trump. Risk assets, though, still cheered hints of any type of de-escalation, which is why you saw small caps like the Russell 2000 close over 2% higher, Bitcoin up about 3%, and tech in general, S&P, the NASDAQ, all closing higher. Specifically in big cap technology, NVIDIA closed nearly 2% higher after announcing a partnership with Emerald AI, AES, and other power companies to build a new class of AI factories that can plug into the grid just more quickly, according to them. Semiconductor equipment names also surged after Elon Musk outlined plans for a massive U.S. chip facility called Terafab to support Tesla and SpaceX. Meanwhile, those memory names and storage names that we talk about all the time, Seagate, SanDisk, Micron, just were under pressure, ranking among the worst S&P 500 performers today. And Elliott Investment Management built a multi-billion-dollar stake in Synopsys, pushing the chip design software firm to really squeeze more profit from its software business. That's why you're seeing shares up almost 3% today. And last but not least, switching out of tech, well, you can say it's still tech, DraftKings and Flutter, both closing higher after reports of a bipartisan bill targeting sports betting on prediction markets, which would limit the competition. That's why they're higher. Guys?
Christina, thank you. Well, the energy complex...
Now, the Kalshi news today is also very interesting. So the reason DraftKings and Flutter were up is because in Nevada, Kalshi is officially, it is ruled illegal for prediction markets to offer sports betting in Nevada, if I'm not wrong. I believe it's Nevada. And so Kalshi has shut down. They've been blocked from dealing in sports betting. You can still do other prediction markets in Nevada, but not sports, which is getting the market to think, wait a second, if that happens in Nevada, could that happen in other countries, or not countries, states as well? And then second of all, and this was one of the craziest headlines I saw today, there are there is a group of investors that have started a prediction markets fund, and Shane of Polymarket and Tarek of Kalshi are seed funding it with $35 million. The goal is for them to invest in 20 different prediction market startups. So you're now starting to see venture capital funds built on the premise that people will use Polymarket and Kalshi APIs to build entire companies around prediction markets, which, I mean, it's kind of crazy given that it just got ruled that sports betting is illegal in one of these states. But it doesn't look like prediction markets are slowing down. On top of that, this headline that Kalshi is not going to be blocking athletes and politicians from trading on their platform. I think this is a really, really good idea. There is way too much potential for insider trading. Again, Polymarket is the only thing that can't be regulated because it's crypto, but Kalshi is actually regulated by the CFTC. So it's a good thing that Kalshi is taking steps to stop some of the stuff. But, there is a lot of pushback happening on prediction markets right now. And I don't know when that's necessarily going to change. And particularly, it's not prediction markets in general. It's sports prediction markets. Like, everyone's just upset that this is basically sports gambling without having to be seen as gambling. And, that is ultimately a risk at the end of the day to all these companies that are implementing this stuff. It's kind of crazier, though, that the prediction markets are ready to take more action on insider trading than the stock market is. Because the SEC has not really done much about it, especially from a politician's lens. Bitcoin right there, 70.7. As insider trading, it feels like is still rampant. Palantir still moving after hours. By the way, you just got this that dropped literally 10 minutes before the close from Gil Loria at D.A. Davidson. Look at the title of this. We have all but given up on other public software companies being able to replicate Palantir's success. Wow. Winning is contagious. One of the common themes we heard from Palantir customers is that they are the ones who approach Palantir because of word of mouth and reputation. They often decide to work more deeply with one industry participant than leveraging the work for competitors, which is what other software companies do, because that way more value is created. This is very distinct from other software companies that charge mostly based on the size of the customer. We have all but given up on other public software companies being able to replicate Palantir's success. This is so crazy, dude. This is literally the stock of a lifetime. Like, it is the company of a generation, and it is the stock of a lifetime. In the midst of all the pain that has happened this year, I mean, year to date, Palantir's down 4%. It's down 4%. It had some low moments at 120. I know Burry's still calling for $50, but my goodness. And even if it falls back to 120 from here, I mean, is it really falling to 50? And by the way, I said this when it was falling originally, for Palantir to really get hit badly, 50, 70% drawdowns, you need the macro to take it down, aka Palantir is not going to go down by itself. I think the broader S&P 500 has to correct 10, 15%. And we kind of got that to an extent, but as soon as the market started recovering, and let's say, we did bottom last week and Trump is serious about ending this war, we don't have to go back up to 200, but we definitely don't have to go back to the 130s, which might allow Palantir to hold on to some of this momentum. Bloom Energy, that's up a little bit after hours. Reddit's up a little bit. S&P 500 up a little bit as well. And then Palantir continues to make a move. Tesla as well, up 0.14% on the day. Here is an update from some analysis that people had on SpaceX and XAI today as well.
What's a scenario where SpaceX merges with Tesla, and why? Because that's the reaction that people have had since Terafab was announced over the weekend.
Yeah, I mean, obviously people have been talking about that possibility for a little while, and SpaceX acquiring XAI certainly catalyzed those conversations even further. And I think Elon is, kind of putting his cards on the table, if you will, as it relates to his ambitions to vertically integrate the ability to be a chip manufacturer, as difficult as it may be, but also in putting in aggregate data centers. Remember, he's done it here on Earth. Colossus 1 and Colossus 2, he did in record time, Colossus 1 specifically, and very large GPU clusters. And so from an engineering perspective, I think he knows how to do it. I'm not trying to be flippant about how difficult some of these things are, but he is an expert at vertically integrating companies.
I would not bet against Elon. I just think, man, it is going to take some time for them to effectively build the type of, I guess, manufacturing hub that Elon wants to build to get all this compute out there. But the more progress that they show, I think the more SpaceX is going to get a bid just in terms of confidence. And if that's the case, then obviously the markets are going to be more excited about it. Wow, we had a Fed president, Mary Daly, just put out a Twitter thread. I thought they only talked through interviews, but I guess they're going direct to the people. Let's see what she has to say. When uncertainty is elevated, considering scenarios is more useful than debating a modal outlook. Today, there are at least two possible paths for the economy. In one, the conflict in the Middle East resolves quickly, oil and energy prices fall, and the impact on the U.S. economy is short-lived and muted. Under those circumstances, it likely will make sense to look through the temporary rise in energy prices, assuming inflation expectations remain well anchored. But if the conflict becomes more protracted, a different scenario is possible. Disruptions in the energy supply and associated cost pressures could persist with increased risk for higher inflation. That's what Goolsbee talked about today as well. Slower growth and a weaker labor market. This would amplify the current trade-offs for monetary policy, making it harder to balance the risks to both sides of our dual mandate. With all of this uncertainty, what's the outlook for monetary policy? There is no single most likely path. With policy in a good place, we need to remain flexible, able to respond to rapidly evolving risks. Now, this may seem vague. Oh, don't you think? Even dissatisfying. But offering too much forward guidance in an uncertain world risks conveying a false sense of certainty, reducing rather than improving transparency and making it harder for the public to clearly predict how the FOMC will react. Okay, this, you know how people say this meeting could have been an email? This didn't even need to be an email. She's basically saying, I can't say anything, and hopefully the war ends soon. But if it doesn't, it's going to be ugly. It's like, yeah, we kind of know that. So for now, recognizing the uncertainty, examining potential scenarios, and staying focused on restoring price stability and supporting full employment no matter how the economy evolves is optimal communication and appropriate policy. We read every word and listen to every word these Fed presidents say, and every time they end up saying nothing. But we're always going to care. We're always going to care. So keep selling covered calls. Yeah, basically. I mean, basically, she just said keep selling your covered calls. Don't get too excited and don't get too gloomy, which might end up being how this ends up playing out. Okay, I think those are most of the headlines. I don't think we missed anything. Oh, Apple. You got a lot of reports saying Apple's going to put out this foldable phone this year. WWDC is going to be in June 8th to June 12th. So you're going to have 4 days of WWDC. And you do have a lot of people speculating that the foldable phone will be out, maybe not during WWDC, but potentially during the September event. And if that's the case, then I guess we're going to see how the market ultimately interprets it. U.S. officials tell the New York Post they no longer believe it is possible to achieve the war's original goals of overthrowing the Iranian regime and putting its nuclear program permanently out of reach. Okay, that's actually a bullish headline. That's actually a bullish headline. So the reason this is a bullish headline is because if U.S. officials are saying it's no longer possible to do regime change, that means they've forgotten about that very difficult initial goal that Trump laid out, which is good because you probably would have to put boots on the ground to make that happen. That means they want to de-escalate. And then two, if this is correct, that they're telling the New York Post that they want to put that putting its nuclear program permanently out of reach is not possible, that is also coinciding with the Axios reports over the weekend, where they said that the administration is focused on a 5-year plan to reduce Iran's reliance on missiles, uranium enrichment, et cetera, to potentially push it back by at least 5 years. Maybe the number ends up being 50 years, like Basant is saying. But if they're not going for regime change, and they are not going for the complete elimination of the nuclear weapons program, but just the delay of that program restarting, I mean, I don't think Israel's going to be happy about that. I don't know if the American people would be happy about that because a lot of people are going to be questioning why we did this in the first place. But it is super bullish on the idea of we are getting a path towards de-escalation. And that is something the markets will like, which for all of us as investors, you know, you're going to have a lot of questions. A lot of people are going to be like, why do we do this? But at least in the short term, that is what matters, to get a conclusion, like a real conclusion to this, not just a tweet that concludes this. And then we move on from there. So we will see. We will see how that ends up playing out, and we will see how the markets ultimately react to this as well. All right, folks, let's bring on someone onto the show who hasn't been on for a while. This is actually a very, very good friend of mine. A lot of you guys probably know him because he is on Twitter. He is on YouTube. For those that don't know him, you guys are going to get to meet him today. His name is TJ the Wheel Deal, and he is someone who has taught me how to sell options. I think back in late 23, early 2024 is when, I think I met him in 2022. Our mutual love of Palantir connected us. But he taught me kind of how to sell covered calls, how to sell cash grid puts, how to sort of understand this entire world. And he has had a journey publicly that we've seen over the past couple of years in terms of navigating selling options. And so today we're going to get some of his perspectives. We're going to see what he's been up to over the past couple of years and how he is also, just like us, navigating these markets. Ladies and gentlemen, Mr. TJ, the Wheel Deal.
What's up, Amit?
What's up, brother? How are you?
I'm good. I'm good. Trying to get my computer facing the right way here.
I like how close you are to the camera. We can just like feel you here. I like it.
I'm good, man. I'm good, man. How you been? I see you growing like crazy. I just looked at your channel. You have like 120,000 subscribers now. That is crazy.
Yeah, I think when we were doing our stuff, it was around 20, 30,000. So it's been cool, man. It's been fun. It's been a great journey. Obviously, I've been seeing your growth as well. You're at like 40,000 X followers. So, and again, you guys can follow me on X. I'm putting it right there. And you are the reason, not just myself, but I think all of us, Steve, Chris, Tanner. I mean, you are the guy that we went to a couple of years ago to learn what the hell is this dude talking about? Selling calls, selling puts, collect premium. And I think we've learned a lot from you. So you can give a little bit of an introduction to the audience that doesn't know you, and then we'll get into some of the strategies you've been using.
For sure. Well, I'm TJ the Wheel Joe. I sell puts. I sell calls for a living. I roll and make dollars and cents. And I do it on a handful of stocks. Like the thing that I feel like has really helped me was that I started selling options on stocks that I wanted to own. And I was a buy, hold, and hope investor, investing in 401k, did that whole deal. Oil field, and then I went full time in 2020. I got laid off from the oil field, and I was like, okay, there's going to be about a 6 to 9 month window before they call us back to work. So if I'm going to figure this out, I have a small window to do so. If not, I got to go get my ass working full time because $80,000 to $120,000 a year wasn't anything that I could walk away from at the time. So I figured it out, man. I figured it out. But what has helped me is selling options on stocks that I have high conviction in. I would say that's like the recipe for success. If you take anything from this thing, I'm going to give it to you early. Is sell puts on a stock that you legitimately would want to own one day, because one day you're going to have to own it.
Yep.
Especially with Trump at the helm, with their one tweet away from plus or minus 1,000 on the Dow. and it could happen both ways on the same day. So make sure that your conviction is high and you start studying these companies, man. I spent a lot of time digging into these companies. That's how I came across Amit's channel. I was invested in Palantir since the DPO.
Yep.
Since the DPO, and then it shot up to like $30-$35. My buddy Alan Shen called me. He's like, get out of there. The valuation's stupid. So I got out of there. And then it started making its way back down to about 20. And I was like, well, I like this Palantir thing again. It was like all over my social media. Like Palantir they were like pumping the advertisement before they were going to do the DPO. So it just, I don't know, man. There was something about it that just really appealed to me. And then I Googled Palantir, and there was something with that freaking movie. What were those movies? The Lord of the Rings. It was something with the Lord of the Rings.
I thought you were talking about a movie where they mentioned Palantir, because there's a Netflix movie where it's actually like mentioned stuff. But yes,
no, I think they got the name from the movie The Lord of the Rings, I believe. I mean, you'll know the Genesis more than I do. But I don't know, it's just something that really appealed to me. And then I started digging a little bit on what they actually do. And I was like, this is like a legit important company. I just don't know enough about it. It's like a black box. So I went on Google, YouTube, and boom, here comes Amit, freaking nerding out, little Indian dude with crazy ass hair and looking like he doesn't want to be led on a plane with this crazy beard.
I always say the funniest thing about my Palantir journey is the world somehow let the guy who looks like he should be targeted by Palantir become the Palantir influencer. Like, it was crazy in 2022.
So you started talking about it daily, dude. Like daily, you were pumping out Palantir information, and it helped me get a grasp on what they do. So I was just like, okay, I don't need to know what this company does. My job as an investor or an option seller is to figure out how to learn how to make money off this stock. That's my job. And I let the nerds do what the nerds do. So I appreciate you, Amit, because you've really done 1,000, 2,000 videos on this damn company. And I've been the recipient of making a shitload of money on Palantir. Left a lot of money on the table too because I got caught with my hand in the cookie jar on covered calls. There we go, dude. Look at that. Are y'all gonna let him on the plane? Seriously.
I don't know what I was thinking, bro. I don't know what I was thinking. I don't know. It worked out. Somehow worked out. All right, so let's talk about option selling because it fundamentally has changed my life. The strategy has been, it's changed my mom's life. It's changed my dad's life. It has been one of the most important strategies. A lot of people talk about option buying. Not a lot of people talk about option selling. I think there's been a renaissance over the past couple of years, and you are the guy on the internet for free, giving out the most information, the most alpha in terms of understanding option selling. So I want to get into the strategies you've been utilizing over the past, at least 2026. But before we get into that, can you give a high-level overview on why you care so much about selling options and why you've been doing it for the past 5 years?
The biggest reason was that they say necessity is the mother of creation, right? If you forget about the spiritual side for a second, like people figure out how to do things because they need to do things. So I needed a source of revenue in the stock market that could basically replicate my oil field income.
Right.
So I was like, I can't just afford to, because I had like $250,000 when I added it all up in 2020. And I was like, I can't just do that and hope that it grows one day because how am I going to pay the bills? So I was driving Uber and Lyft, selling wine tours and selling options. Those were my plays, right? That's what I was doing for money when I got laid off from the oil field. And thankfully, there was a situation where they were giving us more unemployment. So our unemployment was a little bit juiced up. So that was also part of my seed capital to keep the lights open at home while I figured out this deal. And then obviously y'all know my journey.
This was what, 2021, 2020? When was this?
2019, 2020.
Okay.
Yeah. Right when COVID started, dude. Like a month after COVID happened, 2 months after COVID happened, we all got laid off in the oil field. Things got real tough for everybody. I mean, you couldn't breathe on anybody. The whole deal was, it was new. It was new to everyone, right? So we were like, dude, this is nuts. And everybody was losing their shit. And then ESPN put out, I know you didn't watch it, Amit, but normal people like us did. They put out The Last Dance from the
Chicago I did. Bulls. First of all, I did watch it. Okay. I cared about basketball. I've watched it 2 more times after that. It was one of the best documentaries ever.
It came out at the perfect time because we were all losing our shit at home, and then all of a sudden they pump out like an episode a week or whatever it was. And we were just like, oh, thank you, Jesus, that there's finally something we could actually do because we're all going stir crazy at this point. The world was shut down, right? This country was shut down. So essentially, I just went down the rabbit hole, man, and I was golfing. I was at a driving range trying to figure out how to golf. Still haven't figured it out, but I was trying. And this guy looked at my portfolio who worked for New York Life. And he was like, dude, have you heard of covered calls? And I heard about it like several years ago, but I paid it no mind because I was doing my own thing in life. He was like, dude, you can make like $2,000 a month right now with the amount of shares that you own just by selling covered calls. He's like, essentially, it's like you look at 100 shares of stock, like a little rental house, and you're going to collect your monthly rent. The only caveat is you got to put your house up for sale here. Whereas whenever you put somebody to lease your home, you don't have to put your house up for sale. And you got that monthly cash flow.
Right.
Because I needed cash. He was like, dude, you got $2,000-$3,000 right here month after month after month if you're not emotionally attached to these stocks. And that's something that he said to me that really stuck. He said, if you're not emotionally attached to these stocks, I was like, I didn't even know who the CEOs were in some of the stocks I was in. You know? So, dude, SPCE was the first stock that I ever sold the covered call on. I bought the shares in front of him, 1,000 shares or 100 shares. It was probably like trading in that $15, $20 range at the time. Put the shares for sale immediately. I had no idea that was called the buy right strategy. So I sold the shares, agreed to sell the shares like 2 or 3 weeks out. They paid me a few $100s for it, and the shares actually got called away. I had no idea that you could roll options. I didn't know what a cash secured put was. I really didn't even know what a covered call was, except that the qualifier was you have to be willing to sell the shares at a certain price on a certain day, and you have to have at least 100 shares to play. Like that was the price of entry into the club, right? So I was like, I could do that. So I did that, man, and then I went into it. I went down this rabbit hole, and I've been there ever since. So essentially, little 1 minute, 2 minute elevator pitch on selling options is you pick a stock that you want to own, and then you got to do homework. Okay, cool. I want to own that stock. That's the easy part. The hard part is figuring out this thing called the intrinsic value. What do you think the stock is worth? Because Mr. Market's telling you what it's going for. Just look up the ticker. But do you think that stock is a good deal? And if it isn't a good deal, then you might want to get paid to wait. So you agree to buy the shares at a discount via a cash secured put. So you're like, okay, the stock's trading at 20. Or let's just take Palantir at the time, right? Palantir was trading between 12, 15, 20 bucks. You're like, it's trading at 20. I don't know enough about it. I don't really know if it's worth 20. Everybody's saying it's overvalued because they've been saying Palantir's overvalued from day one, right? It wasn't a profitable company for 10, 15 years, however long they had been going. And then they went public and people were like, this shit still ain't making money after all this time. So Palantir's like been going up against the market sentiment from day one.
Right.
And Alex Karps had to defend it the whole way. So you're like, okay, well, let me just sell cash secured puts 10, 20% below where it's currently trading. And they're actually going to pay you money for that if you're willing to commit to 100 shares. So effectively, in my mind, I was like, dude, I'm going to get paid money for agreeing to buy these shares at a discount at a point in time. No brainer shit in my mind. And I was like, it adds up to like 30 to 40% cash on cash return. Your ROI could be like 30 to 40% annualized. But you got to be willing to commit to 100 shares. The gimmies and the gotchas. They're going to give you the premium for agreeing to buy the shares at a discount. The gotcha is if you agree to buy Palantir at 15 and it goes down to 7, don't cry to your mom. You know what you signed up for.
And then that 40% annualized return might not happen if the stock gets cut in half, which is the risk.
Yeah. No, well, you're going to get the return on your capital, but now you're going to be underwater on the shares, right?
Right.
But then my logic, because I'm a real simple A to B guy, like a linear in my thinking, I'm like, well, if I own the shares and it dipped 40%, I'm stuck anyway. At least I got paid to ride the roller coaster.
I agree.
So I was like, okay, well, that's going to be my cash flow. The rental house is going to go up or down in value. And I had already owned rental houses before. So I knew that if I was going to own this house for 10, 20, 30 years, who gives a shit about the daily price fluctuations of the home? I'm just concerned about the cash flow. Well, so that's how I got into selling options.
And that's also when you hit me with this analogy, I also really started to understand it. And so we just talked about puts. Let's transition a little bit to calls, and then we'll talk about the strategies you've been deploying. Calls are really interesting because it's like you have tenants in your house, 100 of them in a multi-apartment building, and rent is due at the end of the week or the end of the month. And if they pay their rent, great. If they pay too much, they have to leave. If they don't pay, then at least you still get some upside from them staying in the apartment. Can you talk a little bit about covered calls as a strategy along with puts, which has been useful?
So essentially, just to bring the wheel full circle, if you will, so you get paid for agreeing to buy the shares at a discount, and you do that over and over again while you're getting away from it. At some point, the stock's going to go against you. It's just the laws of Trump tweeting, right? Because we're in 2026 right now, and Trump, dude, you don't have to do technical analysis. Go follow his tweet account. Go to Truth Social. He's going to tell you how the water is going to run that day. And once you take ownership of those shares, then you're going to be like, okay, I got paid money to buy these shares at 15. The stock's trading at 10, 11, 12, whatever it is. It's because it went into money. You own those shares. Now you're like, well, I'm going to put these shares for sale, at least at the strike price that I was assigned these shares, and I'm going to sell a covered call. So you have your shares. You're going to put them up for sale, and you just have to agree to sell them at that particular price, and they're going to pay you a premium for that. So to me, it was like a triple income strategy. I was going to get paid money going in, money going out, plus the difference between what I paid for the shares and what I sold for the shares. And then you just rinse and repeat. Again, there's no emotional attachment. You're just playing the math.
Right.
Now, there's a lot of opportunity cost. The stock dips to 0, you're stuck. The stock moons to 100 and you agree to sell the shares at 20, don't cry to mom. You got to know what it is that you signed up for. But then entered the quasi pseudo, if you will, silver bullet, which was rolling. I had no idea that these stocks weren't like set in stone. It wasn't like Moses coming down with the 10 commandments. This is all flexible. Dude, I didn't know that for like 6 months. Amit, a lot of people didn't know that.
I learned when you taught me. Yeah.
I did not know that you could roll in and out of these options. It was like you could be a woman. Dude, women are the best at selling options. They change their mind all the time. You could change your mind here. You could get paid to change your mind. And it just becomes a game of credits and debits. Yeah, credits on one side of the ledger, debits on the other side. Your job is to make sure that that ticker is yielding a lot more credits and debits at the end of the day. And you obviously have to consider your taxes. When you sell options, it's ordinary income.
Right.
You have to consider those things as well. And I got into it, dude. And I was like, okay, this is great. I'm gonna look for high beta stocks because they're gonna have higher volatility, higher premiums. But then that strategy started backfiring because the most important thing that I realized about a year and a half going in is you need to pick a quality company. You gotta have a quality. Dude, I was selling shit on Plug Power, on Workhorse. Like, I'm gonna give you all some names. I'm gonna show you all the D-Gen road that I was on. A company called IDEX. I don't think IDEX is listed anymore. That was my first 6-figure loss. IDEX. There was several
because
space.
The premiums are so juicy on these names, but they're juicy for a reason.
It's exciting. Yeah, those are the gimmies and the gotchas. I didn't know that at the time, though. And I was like, dude, why are they paying so much money? I didn't know things like, expected move. I didn't understand the Greeks. I didn't understand the delta and how the gamma is going to accelerate the delta. And it's like a snowball. And the bigger that it gets going downhill, it's like it becomes unstoppable. And then you got your Vega. Then you got this other secondary, tertiary Greek called the Vama that's going to accelerate the Vega. And it's like, holy shit, things can spiral out of control very, very quickly. So along the way, I learned about tail risk. So I'm like, if they give you $100 or $1,000 in premiums, or $100,000 in premiums, depending on what size your account is, I learned that the first 50% of the money that you collect is a lot easier to capture than the second 50%. And that second 50% is called your tail risk. So Tasty Trade promotes sell options 30 to 45 days out, manage them 21 days to expiration, and you can likely capture that first 50%. You don't have to deal with the tail risk and just live there. Pretend like your expiration date is actually 21 days out. And I started doing that over and over, dude. And then I raised $5 million. I doubled that twice. I got 10% for my trouble, and that was my lottery ticket. My second lottery, because I won the lotto twice, I feel. It's financially 3 times. One was I stumbled onto the oil field on March the 17th, 2011, when I was down and out.
Yeah.
The second time I won the lotto was COVID happened, and it gave me this opportunity because I had nothing else to do. And Robinhood was the talk of the town.
Yeah.
And I already had a little Robinhood account. I had already been swing trading, just happenstance. So I stumbled into selling options. And then I raised $5 million and I doubled that twice, and I got 10% of that. And that was my lottery ticket.
Yep.
And then the third lottery ticket, and it's the biggest one, is I married my wife.
Aw.
And bro, game changer, legit game changer for me. Game changer. She was like my catalyst. It was like, you could do this. She was Stanford grad economics, all that stuff. And she gave me the confidence, bro, to go conquer the fucking world. It was crazy.
Yeah. A good woman will do that, right?
Yeah, it inspires you to become a better man if you want to keep her, right? Because it's one thing to get her attention, it's another thing to keep her attention. It's a lot like YouTube. A lot of people start off real hot getting people's attention, but then it's hard to keep it because you got to put in the work.
Right.
So,
okay, so
short, man, get paid to buy the shares, get paid to sell the shares, the difference, and then managing. Selling options is easy. Management is an art form. It takes a lifetime to really master. Still learning that, especially now that I went from cash secured puts and covered calls to now doing things naked because it gives me a lot more leverage. There was another learning curve.
So I want to talk about that. But before we get into that, because the naked strategies I think are really interesting in the context of the stocks using them on, I still want to talk more broadly before we get into it. Also, for the person saying for Amit, that's a husband, not a wife. You're funny. What TJ, the gay jokes have not gone away since you like.
Dude, I don't know how you do this, bro. I don't go live anymore because, dude, some of these comments legit. Like, dude, I've been doing martial arts for like 20 years, and they get me angry to the point where I'm like, dude, have you seen my guillotine hold? I feel like just choking the fuck out of somebody.
Dude, they called me a Starbucks employee today. Like,
oh, because of your shirt.
Yes, because of the shirt. Before we get into your specific strategies, if I came up to you and said, TJ, I just learned how to sell options. It's 2026. It's been 3 months. You keep up with the markets every day. What is your philosophy currently right now and potentially for the next 6 months on selling options? Would you sell aggressive covered calls, sell puts? How are you kind of thinking of it for someone who's not doing it naked, but someone who's just getting into it with their first 10 grand?
Dude, I'd say the very, very first qualifier for me, and it's what I learned early on, is conviction. You have to have high conviction on the stocks that you want to sell options on, because this market can turn against you really, really ugly. And you don't want to have a bunch of money tied up in a stock that you don't believe in just because some YouTuber said it was a good idea or somebody on X or whatever. You cannot borrow conviction. I've said this for the last 4 years on YouTube. You cannot borrow conviction. Like, I had to put in the work on Palantir, and I watched a lot of videos, mostly yours at the time. And I had to, listen to those boring ass, it was so boring. It's just I didn't understand them, right? All these earnings calls and freaking Alex Karp using fucking words that I didn't even know. So I'm sitting there, need a thesaurus to listen to this dude talk. And I'm like, dude, this is tough. Like, it's not just a black box. I'm not even sure this dude's speaking English half the time. No. Like, I'm like, it's tough. I'm just saying it's tough when you're not super nerdy. Palantir is a real hard company to like grasp, like what the hell they actually do. So you got to have conviction in your stock. You got to know what you own and why you own it, right? Like those Peter Lynch quotes. And then like the Warren Buffett quote really helped me. If you're not willing to own the stock for 10 years, don't bother owning it for 10 minutes. And if you can't handle the stock going down 50% because you're going to freak out, then don't buy the stock. Like, don't buy the stock. And, that helped me, man. So I would say stick to high conviction. Don't spread yourself too thin. Manage your bankroll. Manage the real estate in between your ears. And land on your stocks and then land on your strategy, whether you're going to do a legit sell puts, sell calls, collect premium, roll what makes dollars and cents. That's all fine. But the biggest alpha is always going to be in owning the shares and writing those up. You've experienced that a couple of times with Robinhood and Palantir. So I always like to have exposure to the upside because ultimately the market trends up. There's 150 years or so of historical data that supports that philosophy. So I always like to I'm ultimately bullish at the end of the day, but I like to get paid sufficient premium because those drawdowns can be very, very severe. So I'm a little adverse to owning a bunch of shares.
Do you think 2026 is a year for covered calls?
Right now, it certainly has been. But I always say, man, like protect those covered calls, like buy some leaps on top of it. Or I've graduated now. Like you don't just have to do covered calls. You can do a call credit spread.
Right.
So it's like you sell the call and then buy the call right on top of it. That you have a defined risk to the upside in case the stock turns into a runaway train and it Palantir's on you or Robinhood's on you, right? Because these stocks, when they got going, like there's a lot of people, myself included, that we got caught one hand in the cookie jar selling a bunch of covered calls, and you leave a lot of potential alpha on the table if you don't cut the loss early and let the horse run. So don't get stubborn, man. It's not about being right. It's about being rich. That is the quote that I'm going to die on the hill. I feel like there's a lot of people that go on YouTube, they go on X, and they just want to tell everybody how right they are. And I'm like, you can have a lot more fun in life if you figure out how to be rich. No. Like put your energy into learning how to be rich, and then from there graduate to learn how to be wealthy, because that's where it's really at. That's the flex. The flex is where you have the control of your time. Like you could do whatever the heck you want to do because you control your time. Nobody controls you. And that usually happens when people learn how to make money work for them. Right.
And you're making the broader point that all of us will get stock picks wrong. All of us will sell the call too aggressively or sell the put too aggressively. But at the end of the day, and Druckenmiller says this, it's how wrong you are or how right you are versus the percentage of times you are right versus wrong.
Real quickly on covered calls, I want to dispel this. Oh, I sold the covered calls on Palantir at 30 and the stock went up to 100. I'll never do that again. And I'm like, you're telling me you couldn't buy it back at 35, 36, 37, 38? That's not just a covered call strategy. You didn't have the conviction to get back in because you're just going to use this one time that you were wrong to decide how I'm not going to make money on this ticker anymore. And you're going to blame the strategy. Like, dude, there's the horse and then there's the jockey. The jockey is very important in this equation, and that's you. That's me. We're the people pushing the buttons here.
I am very happy you bring this up because I hear this critique as well about selling options all the time, where people are like, it doesn't work, or it doesn't make sense, or I sold a covered call and I got stuck. It's like, okay, I'm sure you've bought a stock before and it's gone down. Like that doesn't mean the stock market is broken. Yeah. So like these are very simple to understand, but when you look at the grand scheme of the overall amount of market makers and algorithms that are involved, complex vehicles that are in the derivatives market, and sometimes it will go against you. That does not mean that if you sold a covered call on NVIDIA at 90 and now it's at 180 and you lost your NVIDIA shares, that selling covered calls at NVIDIA at 175 is a bad strategy. It's a different company. It's added $2 trillion of valuation. It might not easily double in the same amount of time that it did from the DeepSeek lows. And so that context is really important before people just say, the strategy itself is horrible. And that's like people saying the stock market itself is a scam. Which is
I
like,
think that we live in an age, I call it the participation trophy syndrome, right? Like, and then like nothing's your fault. You know, everybody's in Alcoholics Anonymous class doing their 12 steps, getting their token, but it's never your fault. Like at some point you have to own your life. You have to, you have to take responsibility for your actions. We push our buttons, we live with our results. You know, everybody gives themselves credits for the wins, but they want to blame other people for the losses. And
Right.
I'm like, how does that logic doesn't math in my mind? I don't understand it.
Okay, so let's talk about the strategy that you're utilizing right now. And I want to give a bit of a disclaimer before you kind of fully explain it. So TJ used to be on Robinhood when he came on my channel, and we were running, we had like $1 million account challenge, and we did Shopify, Hood, Palantir, we did a bunch of different names. He has graduated from Robinhood. There are a lot of restrictions on Robinhood to sell options, particularly when it comes to margin maintenance and all this different stuff. And ultimately, he needed a much bigger platform to kind of support what he's been doing. From my understanding, correct me if I'm wrong, now you've decided that your strategy as a professional wheeler is not buying stock. It is using option strategies to play two sides against each other. So instead of buying stock and then selling covered calls on it, you are selling the covered calls, which means you don't own the stock, so they're naked. And you're hedging the upside of the call with the downside of selling the put. And you're kind of navigating that straddle together between the put and the call. It's unlocking a lot more margin. It's unlocking a lot more theta decay. And ultimately, it's giving you much more opportunities to be able to do this at a much more professional level. Before you explain it again, I just want to let everyone know it's a fundamentally different strategy than actually buying 100 shares of SoFi and selling a call, or selling a put on SoFi at 16 and putting up $1,600 of collateral. What TJ is about to describe is really not for anyone who's not literally obsessed with doing this professionally. It's definitely not for me. It's also not for people that don't have a small risk tolerance. But I am curious how you've been utilizing it, and then you can share what positions that it's been effective for you.
Yeah, so I'd say what happened was, first of all, I got kicked out of Robinhood. Let's just be clear. I featured my buddy's account on
I
here.
forgot. Yeah, you did.
I featured my buddy's account on here, and I traded it live. So that's a no-no, just so y'all know. On Tasty Trade, that's not necessarily a no-no because they have what's called limited trading authorization. It's where you can basically say, omit. You can tell Tasty Trade, I'm an idiot. I'm going to let TJ push the buttons on my account, and I'm not going to cry wolf if something doesn't go our way. Yeah. So Robinhood's like, hey, we don't want any part of that shit, and I get it. But there's the Charles Schwabs of the world and Tasty Trades of the world, and a couple others are like, okay, you want to play that game? I don't advise it, but sign the paperwork because we're not going to go meet you at Judge Judy. Y'all are all grown men and women here. So that was the main issue. And then also we were going to leave the platform anyway, but we were about 3 to 6 months away from doing so because of the contract limitations. Like Robinhood capped us at 200 contracts, and we're trying to do 1,000, 2,000, 3,000, 4,000, 5,000 contracts eventually. I'm like, that's a lot of trades. That's a lot of accounting. I'm having to input everything into the wheel tracker. And we had several conversations with Robinhood, and they weren't going to do it.
And to add some input here, I really wish Robinhood would focus on this stuff, because TJ would be a very profitable customer for Robinhood. And instead they're focused on stuff that some of these initiatives I don't think are as relevant to like drive revenue for the business. So hopefully they just started giving you cash on your collateral. So that's nice. But
huge, dude. I have no issues with Robinhood. I feel like they helped create me, right? Because that user interface was it's so user friendly. It's so easy to navigate that it gave me the confidence to push the buttons and not feel like I was about to fat thumb something.
Right.
Because if I would have gone on the Tasty Trade platform initially, there's just too much information. It's very busy because it's almost for like professional traders, if you will. Like they're going to give you all the metrics that you need. Like I would do videos on like, this is how you calculate the extrinsic value, you know? And Tasty Trade's like, dude, here's the expected move. Here's the extrinsic value. Like freaking focus on your portfolio margin, your buying power reduction, all that stuff. Like just higher level metrics that we all need, that we all need. And they don't use, if you have an account over, I believe it's $175,000, you don't use just what's called Reg T margin, you use portfolio margin. Yeah. So it's a fraction of the collateral required that's earmarked in order to place the trade. So it unlocks a lot of potential for more gains, but also more losses. So you got to know what it is that you are signing up for. And I knew that it was going to be a rocky year because I had two mentors that both have over $100 million in the market, and they mentor me on a regular basis. And they're like, dude, here's the thing. Let me tell you what's good. What's good is you ultimately figure out how to make $1 million a month. That's what's good. Let me tell you what's not good. You're going to experience some really big losses because you're not going to really understand these metrics, and you're already at a level in your mind to where you don't want to like sit through the lecture. So you're just going to have to go pay your tuition. And I was like, you're crazy. I'm TJ the Wheel Deal. Well, let me tell you, I paid tuition. I paid tuition, and now I'm in some trades that are just printing money. Dude, exactly the way they called it. I try everything to get them on my channel. In fact, I like to get them on your channel because you have a much bigger audience, but they just won't do it. They love their anonymity, and they love just making a lot of money and people not knowing who they are. Like there's something very special about that to a lot of people. Not everybody wants to go on here and show you every freaking trade like I've done for the last 4 years, because then you feel you're like a fishbowl. It's like the fishbowl syndrome. I never really felt it until my wife pointed it out. Yeah. I didn't think anything about what I was doing, and she was like, there's like these meetups and stuff. I know you have a meetup coming up, and you've had a couple of them, and I wanted to go to one of them. I think it was in Miami. And my wife was like, well, do you think that's wise? I mean, you trade live, like, well, you don't know who's there. And she started bringing up all this other nonsense in my mind. But then I reflected, and I was like, dude, it's a valid. There's a reason people don't do what I do, because you're literally opening yourself up for somebody to be just a dick.
Yeah.
And, it is what it is. But anyway, can you show a screenshot? I posted a screenshot on X, and we can stay right there. That way I'm not flipping back and forth, because I only have 5 tickers that I sell options on.
So I'm going to need you to share it, because unfortunately X, literally in the past 5 minutes, it's not working for me. I'm pretty sure it's working on my other computer. It's not working on this laptop. I don't know why.
Okay. I might actually just be able to get into.
While you're doing that, Ryan, thank you for the $20 super chat. Hopefully we can get TJ to one of these meetups, maybe in Austin. We're gonna do Austin in November, so hopefully we can get TJ there. And Dean, thank you for the $100 super chat as well. TJ's favorite quote: "I don't want squatters in my account. Love it. Just want to try." TJ learned a lot. Best of luck to you in a minute. Awesome. Love it, Dean. Thank you for the super chat. And that is also one of my favorite quotes from TJ. Awesome. Yeah, guys, I don't know why X is not working on.
Are you able to see it or not? I was able to pull up the account. I don't know if it's showing on your end or not.
It's very blurry, but we can still see it.
Okay, give it time. It'll populate. In fact, I'm gonna see if I can get over to the.
Oh yeah, there it is. If you could zoom in, if that.
Yeah,
works.
now I'm gonna go to the website version. They have a.
Okay.
They have what do you call it? I'm able to zoom in on this side of the house.
Yeah, so we'll talk about the 5 tickers that TJ's consolidated.
Can you take it off the screen real quick, though, Mitt? Because I'm not sure it's going to ask me for passwords and stuff.
Yeah.
Last thing I need to do is get hacked over here. Bear with me.
Yeah, X is working on my phone too, but on the desktop, dude, it's so weird. I don't know why it's.
Okay, we should be good. We should be good. Yeah, we should be good. Okay, super. So what I'm going to do is I'm going to put this on days to expiration. I've already got it all set up. Can you guys see that pretty well? Is that a lot easier?
Yeah, maybe a little bit more zoom would be amazing, but still that's pretty decent.
A little better?
Yep, perfect. Okay.
Awesome. So essentially what this thing shows you is, I'm just going to stick on Palantir, because I mean, this is ultimately Palantir Nation, right?
Yep.
So what I have here is I have an agreement to buy 500,000 shares of Palantir at $80, 451 days from now. And they paid us $7 a contract. So
just to put some context, that's 500,000 at $50. That is $25 million of Palantir. TJ would be obligated to buy.
40 million.
40 million if Palantir got to that $50 range.
Correct. Now, obviously, I would roll that. I wouldn't take ownership at 50. But this is the actual contract is an agreement to buy 500,000 shares of Palantir at $80. So the notional, the way you get to the notional, you take the 5,000 times the 80, and then you multiply that number times 100. So that's how you get to that number. And they paid us
expiration. That's June. So in
451 days. So June 17th.
June 2027. Okay, got it.
So I basically said, as much as I feel like I know about Palantir, and as much shit as I've talked about the valuation, because I'm not shy about it, I think Palantir is trading at sky high valuations. Not so much anymore, but when it touched, I think 220 that day, I was like, this is just retarded. And that's why I got into this range game, by the way, is because valuations just weren't making sense for me. So I was like, I'm not very comfortable owning too many stocks right now. So I just want to play them to be in a range. And if they'll pay me money for them to be in a range, I feel like that'll be my game, if you will. So I made an agreement to buy the shares at 80, way down the road. They paid us $7 a contract. So you guys could do the math on that. Amit, $7 times 100 times 5,000 contracts. So a few million dollars.
$3.5 million of premium.
Right. But in the interim, Tasty Trade's like, hey, you don't have to own the shares if you want to pretend like you own them and sell covered calls. Just know what it is that you're signing up for. You have to deliver these shares if it hits your strike price if you don't manage to trade accordingly. So I entered into an agreement to sell 200,000 shares of Palantir at $220, which I believe is their intraday high, 151 days from now, and they paid us $783 times 2,000 contracts, whatever the math ends up being there. I want to say it was about 1.5 million or so, give or take.
1.5. So let's recap for a second. So TJ is agreeing to sell 200,000 shares of Palantir at 220 in 150 days, August 21st. He collected $1.5 million of premium from the market to sell those calls. And he's agreeing to buy 500,000 shares at $80 in 415 days, which would be an $80 strike, and he collected $3.5 million of that. Now, he is not putting up the collateral that is necessary to buy all those shares on the put side, and he also doesn't have the collateral, which would be the actual stock, to sell all those calls on the upside, which is why, once again, this is incredibly risky, and this is something that most people should not be doing. You got to be very, very professional to do this. So, TJ, the question here is...
The capital requirement is $2 million is what it's taking right now. But as we get closer to expiration, there's a rule of 15%. So I'll get into the weeds a little bit. Like there's metrics that I look at. So this isn't as crazy as you guys think, because I call it premium cash grabbing. I know that we cannot afford to take ownership of $40 million because I could look at the cash in the account and we only got 14 million. In cash.
So that was going to be my next question. Then I'll let you go off on this. How are you managing it? Can you speak to the risk to the upside, to the downside? If Palantir goes to 190 tomorrow, how would you deal with that? And kind of what's your overall take on doing this?
Yeah, so it's just about managing your deltas, right? Like at the and I don't know that I have those on here. I do have it on here. So if you got to look at your position delta right here. So we have 44,000 is what we're making for every dollar that Palantir goes up. But we're also losing 46,000 for every dollar that goes up on the calls. So this position is actually pretty delta neutral. So mostly what we're doing right now is we're collecting theta, which is pretty decent. The theta snowman right here is about $21,000 a day. So very.
Can you real quickly explain what is theta for those that don't know?
So theta is the amount of money that you're capturing, the time value that you're capturing on a daily basis. If everything remains equal, like the price remains equal, the volatility remains equal, the interest rates, you like a little row, like everything remains equal. That's how much is going from the extrinsic value to your net liquidation value on a daily basis. It doesn't exactly work out that way, but that's just they kind of give you that hourglass, like this is a salt hourglass, like, because at the end of the day, all of this extrinsic value has to come off the books over the next 451 days on the puts and 151 days on the short calls. So my idea was to sell a put at a strike that I just do not think Palantir is going to get to, even if the Democrats win in November. Palantir were to somehow go from having probably the most sticky business model to a not so sticky business model. I think that it would find a real solid base at 100, because I think the Palantir army would step up, because psychologically they're like, no, we want to keep it 100. These are all the bets that I'm making in my mind with the market. So I'm like, I just think that Palantir Nation is just way too strong. They have, what have they gotten? $4 or $5 billion in contracts since their last earnings. I mean, all this company does is generate contracts that stick, and their existing customers are getting bigger, not smaller.
Right.
But again, I only do this on a company that I'm extremely familiar with. This isn't like for just some run-of-the-mill company, I feel like I'm not a MIT, but I've probably invested 200 to 300 hours of my life between earnings calls and watching videos and stuff. And I know the pipeline with Palantir, dude, all they're doing is growing their book, and they're ultimately growing into this crazy valuation that they have. So it is my bet that the sentiment is going to be very, very high still. And even if it falls off, I'm like, okay, it needs a 50% haircut to get to 180. So that's a very manageable situation for me. And again, keep in mind, this isn't set in stone. I could always roll this contract down. If Palantir takes a shit to like 100 in the next year and I start feeling a little bit skittish, I'm going to kick the contract out another year and I'm going to go from 80 to 70 or 60. So I'm going to spread the wings. I'm going to move the goalposts, if you will, until I can get it to a level to where I can actually take ownership of these shares, because we also have about 15 million on the sidelines. That's not on here.
Right.
So I'm like, what's my all-in price on Palantir? I'll give it to y'all already. Spoiler alert, it's 50. If Palantir were to go to 50, I'm like, okay, this shit doesn't make any sense. It's going to be real fun writing these shares back up to 100 or 150.
Okay, so we talked about if Palantir were to take a big dip, you would roll the calls out and try to get that strike price at 80 to go down below 80. What if it went up? So you have August 220s. I'm assuming that is implying you don't think Palantir will be 220 by August. What if it's at 90 by next month? What is the strategy on navigating it?
If it goes to 190?
Yeah, by next month.
Nothing, because I don't have to do anything until it gets to like 210, 215. Because if this goalpost, I look at it like two goalposts, right? So if this goalpost gets challenged, I can roll this goalpost. That means that this goalpost is not getting challenged.
Correct.
So now you got to look at the extrinsic value. This is where a little bit more advanced. There's $3 million tied to the goalpost that is pretty far out of the money at 80. And there's 1.26 million tied to the goalpost to the strike that's at 220. So if it starts making its way up, what I could do is I could roll this goalpost out and up, because eventually I want to match these expiration dates. You follow me?
Yeah.
So my vision for the trade is 451 days from now, like let's say in 4 months, I'm done with the 220s. We've captured, another $600,000 or $700,000 of that premium. I will then roll that strike out and up again. And if Palantir's got the mojo, I'll roll it up from 220 to 240 or 250 so that I can stay out of harm's way if Palantir is just like, hey, we're going to get to $1 trillion at some point, because I believe that is true. I believe that Palantir is going to go to $1 trillion. I just don't think it's going to happen within the next 5 years. That's why I'm very comfortable selling the naked calls right here. I just don't think it can pump to those levels. And if it does, it's a very manageable situation. I would simply roll it out 3 or 4 months and go to 260 and then chill out. And if that is not enough, because the deltas are so off balance at that point, but you got to also understand, I only got 2,000 contracts versus 5,000 contracts. That's why the weight of the short puts is a lot more than the weight of the short calls. It's like a seesaw, right?
Right.
I can also increase the strike price from like 80 to 100 or 110, 120 on the puts. And those 5,000 contracts are going to fetch me a hell of a lot of premium that I can then use those credits to increase the strike price on the short call. If I don't want to extend the contract, I could pay for those debits with the credits from the short puts.
So to explain that, let's say Palantir goes to 200, your puts would start to become a lot less valuable. So you're saying you would roll the puts up to collect more premium. So go from 80 to maybe 120, and then take that money and then pay the debit, because you're going to have to pay a debit to roll to keep the same strike price or to keep the same expiration date from 220 to maybe 250. But your net, you're essentially breaking even on the debit in and of itself.
Correct. Because I have more puts than I have calls. So why is that? Is because I'm a lot more bullish on Palantir than I am bearish.
Right.
Because I think the chances of it going to 80 are a lot less than the chances of it going to 200. Now, make no mistake about it. I don't think I have to do shit here. I think that I could just cruise, ask your Palantir Nation what they think. But I don't see Palantir getting to $220. So that 1.260, I think it's not just captured, collected premium. I think that it will be captured premium. And then I want to do it again, and I want to do it at 240, 250. My vision 451 out is for this Palantir on the call to be probably like at 280 to 300.
Have you calculated the percentage return you get from doing this versus just like buying this? Because the inevitable question is, what if you just bought Palantir and it goes to 200 itself? Like, how do you navigate doing this, which is a lot more complex versus
You're good. No, you're good at math. Just right here. Look right here. You see that capital requirement? $2 million. You see it?
Yeah.
So, oh shit! I don't know what I did a minute.
No, you just zoomed in. 2.05.
It's been doing this. I'm gonna have to. I'm not able to get it back. Hold on.
If you're on a Mac and you take your two fingers, you can kind of like put them together and zoom out. And that would do that as well.
Yeah, it's not doing. I am on a Mac, but StreamYard's been doing this to me, so it makes me log off and I have to log right back on. Give me a second, okay?
Okay, no worries. I'll do the math here while you're there. All right, so basically he's showing 2 million of collateral that's needed to place the trade. The return just on the call side is 1.5. So obviously that's a pretty attractive return. If you do 1.5 divided by 2 million, that is 75% in what? I don't know when he put on the trade, but if it's expiring in August, let's say he put on the trade last month, that's February, March, April, May, June, July, September, August. That's 8 months. 75 divided by 8, that would be about 9.3% a month. 9.3% a month. And then if you add in the other 3.5 million from the puts, 3.5 plus 1.5 is 5 divided by 2. That's a 250% return. 100% return. No, that is 250% return. But that's over 17 months, right? 12, 6 plus 9, 15. So you do the math on that. That would be about 15% a month. Granted, there's a lot more risks to be able to get that 15% a month. 15% a month is not normal, right? And that's why TJ is doing it, because he wants significant alpha. I mean, people will be happy if they get 15% a year. The S&P did 15% last year. To get 15% a month is crazy, but there are risks associated to getting that 15%. And that's what happens when you are navigating these with this type of a strategy, especially if it's naked. Okay, you're good.
We're back.
Yep.
So essentially,
so we did the math. It's like 250% by June if you collect everything, and it's like 75% by August if you only collect the call side premium.
Yeah, it's intoxicating, dude. And the reason that I did it, Amit, was because my buddy grew his account from 20 million to 100 million in 3 years.
Yep.
Just playing the range game. He's like, dude, I'm tired of valuation. I was right where he's at. Where I'm at, or where I was a year ago, he was like 4 or 5 years ago. And so I was just tired of trying to make sense of these valuations, dude. Like, I was like, dude, why is Palantir running so hard? Why is it running so hard? Tesla, like, don't even get me started on Tesla. Like, it's just, this valuation is it just doesn't make sense to me. It just does not make sense to me, but that's not my job. My job is to make dollars, and I'll let the smart people make sense of it. That's not, these valuations were driving me crazy. Like, it was to the point where I was like angry. I felt angry at Mr. Market because these valuations just seem so frothy to me. So I was like, let me play these stocks for a nice range. And if I could get, 30, 40% a year, once I get proficient at it, I don't expect to get the kind of returns that my buddy got, because I'm like a little bit more realistic, because I was doing like 20 to 25%, doing everything covered. So I was like, if I could add another 5 to 10 percentage points on that, then I'd feel like it was a successful transition. But my mind feels clear because I'm not angry anymore. Like, I'm not angry about Palantir's valuation. I'm like, Palantir's already made us over $1 million. It already made us about $1.5 million on Robinhood. Now I've made another $1 million on Palantir, and I haven't had to own one share. So I don't have that stress of the drawdowns and trying to justify the valuations. And I don't even listen to earnings calls anymore, just to be frank. Like, I feel like there's no point.
So just to recap, we're talking about 2 million of collateral to potentially make over 16 months 250%.
Keep in mind, the collateral is not static; it's dynamic. So depending on how the share price is performing, Tasty Trade's going to want to earmark more monies.
What would you say is the range? Is it like a 10 to 20% range?
So it's called the rule of 15%. They'll stress test your portfolio 15%. So Palantir is cruising, it goes a quick spike 15% up or down, and Palantir's done that before, right? In both directions, unfortunately. They're like, they want to know, what does that look like? What does that do to your deltas? What does it do to the gamma? And they basically just don't really want me to play inside of that 21 days to expiration, because that gamma tail risk does get, pretty serious. So that's why the goalposts are extremely wide. If I play shorter dated strikes, then the goalpost can be more narrow because you're not as susceptible to Vega. Like to me, I look at Vega as like a gust of wind. So if you're kicking like a football, that gust of wind is really going to affect you if it's 40, 50, 60, 70 yards out. But if you're only kicking the football 10 or 20 yards, that gust of wind will affect you, but it doesn't affect you as much. That's your Vega.
So at least based on the collateral that you're being quoted today, that 2 million theoretically could get you this 250% return, 75% in 8 months. Those are obviously not normal numbers. Those are incredibly difficult numbers.
Well,
and
I'm also, it's a supersized contract. Why? Why is that contract so big? Because it's my tuition trade. Right. Because I got my ass kicked on 3 other stocks, and they were like, this is what's going to happen. They gave me the playbook. It's like, you're going to find a company that this just works on for you. And I started making money right away with Palantir. I haven't one losing trade on Palantir yet. And I finally found it, and I'm like, okay, dude, I really doubt it's going to get to 220. If it does, I'll manage it, roll it out to 260. I think that's the highest analyst. I think they have one out there at 260, like a crazy ass price target. But Palantir's Palantir, right? It can do some crazy things. So I'm like, okay, I can manage that one. And then the 80, I feel really, really comfortable at. In fact, I was kind of comfortable doing it at 100. But then it felt uneasy. So I went back to 80. Initially, I started at 75. So I've been toggling a little bit emotionally with where I'm really comfortable with. But I'm just trying to get one cycle out of the short calls. And then I'm going to reduce the contracts from 5,000 to 4,000 on the puts. And that way it could get to a level to where, like, okay, we just need to roll one time and we can legit take ownership of the shares, so it doesn't feel so irresponsible and so naked.
Right, because then the calls won't be naked. So that was going to be my question, which is that to get these unusual returns, sometimes you either have to be really early to the stock, or you have to buy options. Like, if you buy options when a stock is 10 and it goes to 20, you can do very well. Or you do what you're doing, which is taking on the risk of doing it naked. And you mentioned that you don't have to worry about the stress of like the earnings or the valuation, because you're playing a range. You're not playing the actual company fundamentals, but you do have to deal with the stress of if this shit spikes heavy or goes down, margin calls, all this stuff. So how do you kind of navigate that in your head? The different type of stress that could be a $40 million stress versus the stress of just bag holding the stock itself.
Managing your buying power. So there's these rules. Like I don't like to be over 60% on buying power usage. That way I can handle the VIX, spiking, because there was like 1 week where it spiked like 40, 50% not too long ago.
Yep.
That hurts your buying power. Volatility goes up, buying power goes down. It's an inverse relation, right? So it's no bueno. Now, if you got a bunch of money on the sidelines and the volatility goes up, congratulations if you're ready to sell options, because they're going to pay you a lot more premium for doing so in a higher volatility environment. So you got to manage your buying power. 1, 2 is your sizing, right? A lot of that just comes with not being super sized. So I had this rule of 1%. I was like, we got a $10 million account. I want to collect $100,000 a day in premium and data.
Yeah.
That rule did not work. And they told me it wasn't going to work, and I didn't believe them. Dr. Jim Schultz, shout out to him. He's done videos on this. He says the rule is 0.5%, and that's on the high end. So we finally landed in the middle. I'm at 0.75. I'm like, I don't want to exceed 0.75%, because if you're exceeding 0.75% of your net liquidation value on your data per day, you're supersized. You're oversized, and it's just a matter of time before the Vega is going to bite you in the ass. And the Vega is your change in implied volatility. So there's that. And then just make sure your goalposts are real wide. And then if you have an investment thesis, then you can do a skewed strangle where you have more puts than calls, or vice versa. depending on what your investment thesis is. That's why all my puts aren't just like 1-for-1. It might be 2-to-1, sometimes 3-to-1, depending on where my my bias is, if you will. So I love playing the range game, bro. I feel more. Now, keep in mind, we still own shares. We have 2 stocks that we own shares on.
Yeah.
25,000
Can you pull up
shares.
the thing again? So we'll talk about the other 4 positions as well.
Yeah, so let me see if I can. It's present, right? Present, share screen. Bear with me. Allow to share.
And I see some questions of people asking what's even the point of options. Again, there might not be a point for a lot of people that just like buying and going long. This is the cool thing about markets is that there is a lot of different ways to win. There's a lot of different ways to lose. So this is one of those ways that, particularly for income generation, which is what TJ is the most focused on, and what a lot of option sellers care about, is a way to potentially win. But there are risks that come with it, just like any business. There are risks, and there's also upside if you can, do it in an effective way. And obviously, if you take it to the level where now you're doing it naked, which means you're not necessarily owning all the shares or having all the collateral, it just introduces different levels of risk. But it's the same thing as if you were owning those shares to an extent. You have to understand how to manage the risk. It just can become riskier if you don't have the shares.
It's not showing up yet, Amit, on your end? You don't see anything?
I see your screen, but you're sharing StreamYard, not.
Okay. Well, what about this one? Does that show up?
Yeah, there you go.
Okay, super. So let me get back to the other side. My accounts.
And yes, I agree with this as well. This type of strategy from TJ is obviously not for small accounts. But for small accounts, I think this is the cool thing about selling options. If you like SoFi and you've got $2,000, you can sell a put or sell a call on SoFi. And that first bit of premium you get from the market, which is just exchanging hands from someone who's bearish or someone who's bullish or someone who's hedging versus someone who's not. That's all it is. It's an exchange of value. And people have different perspectives. They express those perspectives in the market via puts and calls. And if you choose to engage in that perspective as well, obviously, Matt Money talks about it as well. He has a lot of Rocket Lab that he bought at $4. He's now able to sell calls. Elaine in the chat, she has a lot of Palantir that she's able to sell calls on because she bought it at $10. When you build up these massive positions, which it's not going to happen on day one for everybody, but over time when you build it up, it does become a vital asset that obviously can be very valuable to people.
Is it showing a mid or no?
Yep, you're good.
Okay. All right, so let's just go. There's only 5 positions. I can go through them real quick, Amit. So essentially, I've got my ass kicked. This is part of my tuition. I got my ass kicked on BM&R, bought 125,000 shares at $39. I sold the shares off at $19.50, so I realized a huge loss.
Oh, so hold on. You're in the bag holder club with me, Tanner, Steve on BM&R. We're all in it together.
So but $2.5 million realized loss on BM&R. So I turned the shares into leaps. So I bought 1,500 leaps at $25, 669 days out. Fortunately, I'm at least up 148,000 on those, small consolation prize. And I am running the poor man's covered call where you buy the leap and then you sell the short dated calls against it. Right. And I picked up $87,000 in premiums. And these expire 25 days out. So BM&R has the standard $30. And I realized that 87,000.
That's 80,000 in a month, basically.
But it was like a 45-day trade or so.
Okay.
50. Yeah. So it was okay.
Is the goal to collect the $2 million you lost and to break even on it? Like, what's the goal with?
No, dude, I'm in this thing. I want to eventually turn these leaps into shares again. I believe in the concept. I believe in BM&R. I just think that, obviously Tom Lee was early on his predictions. I think that a lot of what he said is going to come to fruition. It's just not going to happen right now.
No.
I don't know how deep you are into it still, but I believe that the world's going on the blockchain, man. And I think Ethereum is going to be the big recipient of that. I don't know that I'm bullish to the point where I think Ethereum's market cap will be bigger than Bitcoin's, but I do think that Ethereum's got a solid 3 to 5x from here in the next 3 to 5 years. And I want to go along on that ride. And BM&R is my proxy for that. And I do like that they're doing the Mr. Beast, and I think they have OpenAI exposure as well. So I like all the things that BM&R is doing, man. I think that it could become a force to be reckoned with, in my opinion. MSTR is just a straight strangle, shorter dated. So I'm just, the goalposts are not as wide because, again, there's not as much distance on the contract time. 53 days out, it needs to camp out between 110 and 200. For a 1.344 win extrinsic value, and I'm already up on this position a little bit. and all.
This one you like for the premiums? You like for Bitcoin? What's the reason you like MSTR?
Yeah, I like MSTR at 100. Like if I had to own shares of MSTR, I'd be very, very comfortable at 100. It's obviously a proxy play for Bitcoin. I'm very, very bullish on Bitcoin to buy $100 a day. I mean, it's actually quite a lot for my personal cash flow because I only pay myself like 30 grand a month. So you're talking about 10% of my personal cash flow going into Bitcoin. So very, very bullish on MSTR. I think at these levels, it's not quite no-brainer territory, but it's approaching it. And I like that. I really believe it could stay between 110 and 200, at least for the next 30 days or so, which would allow me to capture about 60, 70% of this premium. And then I'll roll to the next cycle and I might go down from 110 to like 100. And then depending if I feel bullish on Bitcoin, I'll go from 200 to 220 and start widening the goalpost. Because the wider I can get the goalpost, the easier it is to get to the finish line. Because I'll be mitigating against that gamma risk at the end, the tail risk. Amazon's my baby, man. This is
let's talk about this one. Yeah, so you've become you've been bullish for Amazon for a long time, but now you're like seriously putting some money into this one.
Yeah, so we own 25,000 shares of Amazon at $208. So it's like a C+ entry, not a great entry, if you will. We're not making a lot of money on the shares. And then I've got an agreement to sell a crap load of Amazon. I believe it's 125,000 of Amazon at 240, 53 days out. So my bet is that Amazon's going to be below 240, and they paid us $472 a contract. And then we also have an agreement that it's going to be below or above 180 at the end of the year, and they paid us about 1.1 million for that, give or take. So that's
what's the sort of fundamental on Amazon? You just think AWS? You think Anthropic? Or your wife keeps buying Amazon? Like, what do you think is most important there?
Yeah, well, I think, yeah, but I don't think like my wife doing the whole Amazon Prime and stuff. That's not even where they make the bulk of their money. Like AWS is where they make their money. I do like that. I don't know what their percentage of Anthropic is, but they got a pretty high investment in Anthropic.
Yeah, it's about 15%.
Yeah, so it's solid. I think they're going to win. I think they're going to win. I think this company can legit double in the next 5 years. So I feel like it's a pretty solid cornerstone linchpin play that you can put a lot of money into. You're not going to get crazy returns, but you're also not very likely to lose money at these levels. I think it's priced. I'm not going to say it's a steal of a deal. If it was like a 150, 160, I would say that's a steal of a deal, but it's a reasonable deal. It's not like nosebleed valuations like my beloved Tesla.
Right.
But the thing you're going to get punished. So this is why I was comfortable selling the naked calls, is because I think their CapEx commitment is like over $100 billion or something ridiculous. And I think their free cash flow is probably going to be negative for the year.
Yeah.
So Mr. Market not likely to like that. So I think that Amazon will have a 3 in front of it. I don't know that it happens this year. I think it will certainly happen next year. But I also don't think it's going to go to 180. Or if it does, I think it'll be like a little touch. It won't camp out under 180. So I feel very confident that I won't have to go all in on Amazon at $180 at the end of the year. Or I could just roll it another year and go to 170, 160. And these are campaigns, guys. Like I want to be in these trades for the next 3 to 5 years. So it's just my version of owning the shares. I'm just playing the range game a little bit different. So don't look at these expiration dates like, oh my God, this is D-Day. You know, like that's just not what it is, because I'm managing these trades as we go. SoFi is another one that I own 25,000 shares on. Those are the only two companies that we actually own stock in. 25,000 shares, I bought them at 1703. I didn't even know that there was a short report on it. Albert posted in my WhatsApp group that, hey, why is SoFi tanking? And I had already put a note on my journal. This thing dips close to 50% from the high at 32. I'm going to scoop up some shares, and that's what I did. And then I got the shares and then some for sale at $30, 151 days from now. And then I've got an agreement to buy, again, 500,000 shares of SoFi at 15, 634 days from now, because I don't think it's going to go to those levels. So it's a premium cash grab. I have zero intention of taking ownership of those shares at that level, because I don't think that I will have to. I think that SoFi will easily be trading at about $30, $35 by then. That's why I feel very, very confident in that particular trade.
Is SoFi something you still? I know this was one of the first names you've loved 3 years ago.
Yeah,
Is it still,
my entire 401k is in SoFi,
Mm.
and it's approaching 270,000 shares.
Wow.
And I don't have any covered calls right now. I'm pissed off about it, man. I don't have any covered calls because I thought this thing was going to pump to like 35, and I'm going to sell the covered calls then. And I feel like it's been like 3 or 4 months that I have squatters now, and I'm like freaking out, dude. I'm like, I hate not collecting freaking rent on my shares. It's like a manufactured dividend on steroids, and I had this idea that SoFi is going to moon. They finally got tailwinds. Roy's talking about confluence and all this other shit. And bro, nothing's confluenting. And I'm just like, well, this sucks. And now there's this short report, whether it's good or not. It's had a material impact on the stock, whether the report is legit or not. I'm hoping that SoFi addresses it head on and they don't hide behind just a bunch of legal jargon. So we'll see. I mean, if they got nothing to hide, they should be able to talk, right? That's how I look at it, but I'm not sure.
Okay, so this was really good. Let's get into some Q&A for the next 20 minutes, and then I'll get you out of here, TJ. But first of all, thank you again for all the transparency and showing all this stuff. We have a bunch of questions in the chat, and so I'll hit them with you. You can kind of give your answers. By the way, guys, TJ on YouTube, I'm linking it right here. If you do not follow him, he goes live at least once every week, and you'll be able to get his updates weekly in terms of how he's navigating the portfolio. This portfolio, is this the hedge fund that you showed us, or is that separate from this?
No, it's our family. No.
Okay, so the hedge fund is separate. You're okay.
No, yeah, I don't know. Dude, I can't even see you on here. I can see you over there though. We're good. I lost you on my computer, but as long as you can hear me, we're good, and I'm on the TV, so we're good.
Perfect. Delta entry. How do you think of picking a delta for these straddles?
Yeah, so I typically play between 15 and 25 delta when I'm just kind of like feeling out. And 15 delta is just the price sensitivity of your option to the underlying. So if it's a 15 delta, 15 cents, it's gonna, if the underlying goes up or down $1, you're gonna gain or lose 15 cents. And it's also a percentage of assignment. So you can look at 15 as the percentage that it would actually expire in the money. You would either have to take ownership of the shares if it's a put, a short put, cash secured put, or you would have to sell those shares if it's a short call or a covered call. So 15 to 25 is where I want to play whenever I'm just kind of feeling it out. Like I'm not real sure. Maybe I'm doing the invest and investigate where I just want to be in the trade, but I don't really have like a thesis formed yet, if you will. If I'm very bullish, then I'm in that 30 to 40 delta range, which is pretty close to at the money, because that's where the highest premium is going to be.
And that's aggressive. Yeah.
Yeah.
And so far this year, that's been working. I mean, like on Rocket Lab, it's worked. On Hood, it's worked. On NVIDIA, it's worked. You sell a covered call, a couple bucks above the strike. It has worked out so far. So different markets, I guess, have different strategies. When do you roll your options, and do you wait for a certain profit percentage or near expiration?
Yes. So 21 days to expiration is typically when I like to manage the options, provided that one of the strikes isn't being challenged or compromised. If the strike is breached, then I look at my break even. So let's say my strike is 20 and I got paid $2 in premium. So my break even is 22. If it's a covered call or a cash secured put, let's say it was $2 and it was at 20 and I agreed to buy the shares at 18. That's my break even is 18, if you will, or 16 with the premium. It's whenever my break even is breached, that's typically when I roll. I look at it a lot like swimming, man. The more you go underwater, the harder it's going to be to come up for air. So you could drown if you get too far underwater, if that makes sense.
No, that makes a lot of sense. And obviously, given you're doing a straddle versus a traditional strategy, it's a different question of like, when is it time to fully roll or take profits? Someone had an interesting question. How much are you paying to Tasty Trade in fees? And is it worth it over the no commissions with Hood?
Huge, over 6 figures, mid 6 figures actually in fees, and haven't negotiated with them one bit.
So for you, it's the access to margin and collateral they give you obviously makes up for the fees itself.
And just the fact that we're not limited to the 200 contracts.
Right.
It's huge, man. It's huge because you can't get the fills. Like if I do 200 contracts 10 times over, I'm going to get different fills on all those lots more than likely.
Right.
So I just like I'll do, and again, when I'm trading offline, I get better fills because I'm not in a hurry to get filled.
Yeah.
That's the thing with like trading live. Like it costs me a lot of money. That's why I don't go live as much anymore. Just so you guys, full transparency, it cost me probably $250,000 to $500,000 a year to trade live because I'm trying to get filled to keep the conversation going. Whereas offline, I put my price and do 2 or 3, 4 hours later, the cash register thing's ringing. I'm like, oh, finally, So it's expensive. It's expensive trading live at these levels. Now, if I'm doing it on a $100,000 account, then it's whatever, right? But on the big account, I have to pick my spots because 5,000 contracts adds up. And eventually we will have the conversation with Tasty Trade. But since I'm still cutting my teeth and they've given me a lot of latitude and stuff, I'm not like trying to pinch them on commissions right now. Like, let me get the account to 40, 50 million, and then I will have a little bit more leverage.
Yeah, you'll have a lot more leverage to talk with them. How many days to expiration when you start a trade? So this is interesting because some of them you're short, some of them you're long in terms of like leap puts or leap call. How do you think of expiration?
Yeah, it's because I started a different strategy. I call it the rich man's covered call. So everybody's heard about buying leaps. So I like to start the strategy now with selling leaps. Like I pick a stock that I really am a fan of, and I pick a strike that I'm like, okay, dude, Palantir ain't going to 80. Like, what are we talking about? Like Palantir's not, or SoFi's not going to go back to 15, or if it does, it's certainly not going to stay there. What are we talking about? So I have that idea in my mind. So I pick a strike that I'm super confident in, and I go real heavy, and I go like a year out, year and a half out. And then I start selling short dated calls along the way. Right. And I start bringing the premium, bringing the cash register that way. And it's mutually exclusive, man. Like everybody's like, oh my God, what about the puts? I'm like, well, you know that there's another side of the trade on. So if those puts are getting challenged, then surely the calls are not being challenged. And if the calls are being challenged, then certainly the puts cannot be getting challenged at the same time. So I just like the idea of ringing the cash register on short dated calls along the way. And then the puts are just printing that steady money over and over, because I've sold these mostly way out of the money. Like I'll have a put on MSTR here pretty soon in the distance, and it'll probably be in that $70 to $80 range.
Which
so
theoretically,
like I'm daring Mr. Market to take a shit.
Yeah, that's Bitcoin at what, like under 50 grand maybe, which probably. You would be happy to buy at that point, right?
I would, yeah, I would. And SoFi at 15, I don't think that it would happen, but SoFi at 15, provided that there isn't any merit to this short report, I think SoFi at 15 is a very attractive buy.
Right.
Like, whether you want to say it's a bank, it's this or that. I mean, they are still growing at a pretty substantial CAGR, and it's not a nosebleed multiple, if you will, especially at 15.
Someone said, can you ask him how we can do a similar strategy on Robinhood without the ability to go naked? So obviously Robinhood does not allow people to go naked on this, which I think is a good thing, because at least at the moment, there's way too much retail investor interest that could probably blow up their account if they do that. But can you still straddle?
My favorite strategy still, and I'm doing a version of it on SoFi and Amazon, is the covered strangle. It's when you own the shares and you sell puts and calls around that. So you own 100 shares of your stock, you put the shares for sale at a certain price, and then you have an agreement to buy in another 100 shares at a different price. And you're just doing it. So it's like the wheel strategy on steroids, because you've got both sides working simultaneously. And the beautiful thing about it is you don't have the unlimited risk to the upside, because if the stock shoots up, worst case scenario, you made money by selling your shares at a profit, and now you're going to be in cash and you're just going to sell more aggressive short puts. And you do that over and over again, and you're like, okay, I want a license to sell aggressive covered calls. Let me take those premiums, buy some leaps, that way you have a guaranteed participation trophy to the upside.
Yeah. So let's say you buy 100 shares of SoFi at 17, you sell the call at 18, you sell the put at 14. So now you're in that strangle, and you buy some leaps at 20 in case your shares get sold away at 18. And so you're kind of navigating the entire position in that way, which is not naked. So you don't have the risk of, blowing it up at that point. Correct. NVIDIA, a lot of people asking why you're not selling calls on NVIDIA. It is the best Mag 7 for premium. So why aren't you using NVIDIA?
Yeah, real good question. I was in it until last Friday because of buying power. because of buying power. Yeah, like I have to be mindful of the buying power right now because we're 53 days to expiration on $22 million in notional on MSTR. So there's an agreement to buy 200,000 shares of MSTR at $21 million or $22 million, right? Because at 110, so 110 times the 200,000 shares is going to be 22 million. So I have to be mindful of my buying power because MSTR is one of those stocks that can go up or down 15, 20, 25%. So as we get closer to the days to expiration, on the days of expiration, Tasty Trade is likely to pinch me for more buying power on that particular position. So I can't spread myself too thin. So you have to be cured. If you're going to do what I do, you got to be cured of shiny object syndrome. Like you can't, I'm not just chasing the next shiny object. I'm like, dude, I like the objects I got. I just got to, every trade's a winner and every trade's a loser. It's how I manage the trade, right? So the jockey is very important in this equation. And I'm like, why am I going to go get sidetracked to try to make $100,000 of NVIDIA when I can manage this MSTR trade and make $1 million, possibly $2 million if it starts shooting up to like 170 and I could roll that put up from 110, 120, 130, 140 and bring in another $300,000-$400,000 in premiums over these next 50 days, you know, like I'm like, I got my hands full, dude. I'm good. Like my plate's full. I don't have to look around. Like I'm good with what's on my plate.
So your time is not spent that much anymore looking for new stocks, right? That's not something you care about doing anymore.
I've gone back to my roots. Did I study the technicals a lot? I study the technicals a lot. I use ChatGPT, mostly Grok, to give me the latest. Like I have conversations with them about the 5 tickers on a daily basis. It's actually 7 tickers because I got other tickers in other portfolios. So it's 7 total. And I just try to get up to speed. I watch YouTube videos late at night, people covering these stocks from a fundamental perspective, anybody covering technicals to see if they're saying the same things or there's differing opinions, why there's differing opinions and stuff. And I'm just really trying to learn as much as I can about these particular stocks because I'm selling these supersized puts. And at some point, Mr. Market's going to call me on my shit and I'm going to have to own these shares. Like at some point I'm gonna have to roll, but you're not gonna be able to roll so much. So at some point I might have to take ownership of 100, 200,000 shares of a Palantir or SoFi or something. So you got to make sure that at the end of the day, dude, it's always going to be the golden rule in options. Sell puts on a stock that you don't mind owning because one day you're going to have to own it.
Right. What about selling calls on the SPY? I'm sure you've thought about that. How do you feel about it?
Yeah, I think when we get to like 40, 50 million, I'll definitely go hide 10 or 20 million over there.
Right. But as of now, in the short term,
I've got my hands full. I've got the tuition trade going, which is Palantir. So I want to see that one all play out. Hoping that, you know, maybe a few times a year I'll come on your channel and we can update people on that Palantir trade because that one's going to be on for the next 3 to 5 years. And we can all follow the journey. And, you know, I'd still tune into the Palantir weeklies and stuff. I know you did a shitload of interviews at AIP Con that I haven't gotten through yet. So
that mixology one will make you bullish. That was a good one. But, you know, to your point, like you're managing a trade. So even if you are bullish, you also are looking at, well, is the market going to agree to the level where it's going to take it back to all-time highs? And if it doesn't, in the meantime, do you benefit from yielding the volatility, which you've seemed to pretty much figure out. How do you think about the leverage tickers, the TSLLs, the NVDLs? I think you have a history with those. Would you ever touch those?
I've made 7 figures twice on TSLL. It's probably one of my favorite tickers, but it's tied to Tesla. And right now, Tesla is just not at a valuation that appeals to me. I know they got a lot of stuff but it's all in the future. And we don't know how far into the future it is. So I'm thinking that they're going to put up really shitty quarters. And I know that they didn't get punished, or I think the last quarter was actually surprisingly decent. But I think they're going to put up a couple of really shitty quarters. And I think that they might go down in value. And that's going to bring TSLL in that probably 9 to 10 range sweet spot for me. And I think that would definitely make it back onto the...
So you'd be willing to do your strategy on a levered ETF. It just has to be the right one for you.
Oh, well, I've already done it on TSLL and Tasty Trade and made like 600,000 or 700,000 last year is what I made on TSLL. Right. It's fun, dude. It's fun. I think at one point I owned 100 or 200,000 shares of TSOL, but I just, it's not about TSOL, man. Like, again, you get, what's it tied to? It's tied to Tesla, right? So it's not about TSOL. It's about Tesla. So I followed Tesla, and if Tesla keeps trading at these levels, then I'm likely not going to participate until they deliver a robot or make good on the Roadster, give me the Semi. Is Robotaxi really going to add to the bottom line? Like, there's a lot of sexy stuff going on with Tesla. Now there's like TerraFab, but I don't know if that's even part of Tesla, or is it SpaceX? Is there a merger? Like, there's just a lot of shit going on, and I haven't devoted the time. Like, I haven't devoted the time to keep up with that soap opera, because it's a lot, man. Like, Tesla's, it's a lot. It's a lot, and I like playing the range game. I have a lot more time to myself and to my family now, so I just don't know that I want to go in there again just yet, if that makes sense.
Right. Two last questions for you, and then we'll get you out of here. TJ, again, thank you so much for the time today. This one keeps popping up a lot, and then I'll ask you something a bit more personal about your journey. But blowing up the account, are you afraid of that happening? And how are you macro-wise thinking, whether it's your hedge fund, your family office money, to make sure you don't get to a point where that could happen? And that's, similar for anyone who's engaging in option strategy.
Well, I think having the 25,000 shares of SoFi and the 25,000 shares of Amazon that are bought and paid for makes it really, really difficult to blow up that account. So whenever y'all see the Palantir trade on, or the strategy trade on, I could take 500,000, $1 million loss, but that's going to sting to the tune of 8 to 10%. You know what I mean? Right. Of the net liquidation value. So be very, very hard to blow up the account, because I'm not that stubborn. Meaning I'm okay losing money in the stock market. It's happened before. Like, I've lost 7 figures 3 times in the stock market, guys. So I don't, like, I'm going to lose 7 figures, position myself in Palantir to get it back. And then I think that $1.5 million, that's for the biggest strangle win that I've had so far on SoFi. You got to live to fight another day. Like, I'm okay being wrong. I'm just not going to blow up my account trying to prove a point and be right. Like, sometimes you just get it wrong, dude. Sometimes you just get it wrong and you got to move on. Like, I'm trying to be in this game for the next 30, 40 years if God grants me the health. So it's not about like, oh my God, this idiot lost X, this idiot made it, but it was so irresponsible. People are always going to have shit to say.
No.
And I got this from watching your podcast a month or two ago with Josh. Is that his name?
Josh Brown. Yep.
Yeah, downtown guy. People always have shit to say. My deal is this: show me your results, because I might not like what you have to say or care what you have to say, if those are the results that I'm looking for in life. Yeah. So I just don't listen to people that don't have what I want. Like, that is wisdom that I got when I was 19 years old, and I didn't really know what it meant until like now in my early 50s. I'm 51. But don't listen to people who don't have what you want in life, because what could they offer you? And don't take criticism from someone if you wouldn't go to them for advice.
No.
And that has really cleared my mind space, dude, because there's a lot of trolls in the comments. Everybody's an expert, bro. Everybody knows the right play. They probably talk shit about you because you were wrong on Grab, at least on the timing. And who knows how much you've had to deal with that if they're still making gay jokes about you. I imagine they still come at you on Grab, right?
That's every day.
Yeah. So if they don't have 120,000 followers and aren't growing freaking a channel that gets more fucking views than CNBC and Bloomberg combined, I mean, what can they offer you in the form of criticism? Just don't. I just, and I admire that you're able to handle it better than I do. I get angry and I'm working on it, but the trolls do piss me off in the comments.
Yeah, and also, that Josh Brown clip is really, really important. And I think this entire experience with Grab has taught me a lot in terms of 2 things. I'm happy you brought it up. Number one is, it's a stock market. It is not easy to make money in this stock market. And as strong and as powerful and as successful as you might feel after getting a couple picks, right, like Hood and Palantir, that does not mean the third one is guaranteed to work, especially not in less than a year. And I brought this up over the past couple of weeks. Are we insane that we think a stock needs to go from 4 to 40 in a year. I know we've been conditioned to that. Literally, that's what happened with 2.5 years, Palantir, Robinhood, Rocket Lab, etc. But that's not normal. That doesn't happen. And so the first thing is just understanding, like, okay, it's not going to happen all the time. So although I might have the expectation that I put on myself based on my previous track record, that's not real life. And you have to be able to come to grips with that. Number two, I think Druckenmiller said the other day in that Morgan Stanley interview that if he's right at least 40% of the time, he's happy. Because he knows the majority of the time he will be wrong. And the important thing to recognize, whether it's selling options, whether it's picking stocks, whether it's putting out research on a sector you think that is going to be valuable, and then nothing happens in that sector, or the option goes the wrong way, is like you're going to be wrong. I mean, Warren Buffett has lost $10 billion on Kraft Heinz. This is Warren freaking Buffett. Yeah. So it is funny, to your point, when people try to bring up something and critique you. And I think it's very important to listen to the criticism. I don't think you're ever beneath the criticism and listening to it, but letting it affect your day-to-day life, letting it stay up in your head, letting it become the over prevailing force of how you manage your own mental health and existence. First of all, you're not going to survive on social media if you do that. Second of all, the fact that you're putting your thoughts and ideas out there with your face, not a random profile picture, your face, your name, you're responsible to deal with the criticism that is being held towards you. You're a real person. If someone doesn't have a profile picture, they're never showing their account size, they're never talking about the trades they're making, and they're putting criticism towards you, you have to be strong enough to just deal with that. And I think of someone like Elon, who deals with billions of comments all day saying he's the worst person in the world, I'm like, this guy's created trillions of dollars of value. So
I think the bigger, the more that you're trying to do in life, the more pushback you get. And I think that's just a sign that you're on the right track, man. People don't like when people are bold, man. It's like the whole Machiavellian thing, right? Like fortune favors the bold. But people don't like that because that's uncomfortable for them. And they're like, well, how can this person be so comfortable being so exposed? Like, I could never do that. And they just want to like talk shit about you because it makes them feel better about their shitty little situation. And, it is what it is, man. But I'm just trying to spread love, man. I just feel like I'm just putting out the good vibes. And I'm very blessed to be in the situation that I'm in. My wife reminds me of that daily. So I just got to stay grounded. And at the end of the day, just put out more good than negativity. The world has plenty of negativity, man. So I don't think you need to do that. And I don't talk shit about people's investments. I posted that on X today. Nobody wants to hear that their girlfriend's ugly. I do a bunch of FaceTimes with my community members. And I see a lot of stocks that I wouldn't want to be in, but it's not my job to ridicule them. It's my job to show them, if I was in that situation, what would I do to manufacture the win? Because they're already in there. They obviously like the stock for whatever reason. They put their hard-earned money into it. And I'm going to be like, dude, what are you doing? This stock's shit. I'm going to be like, okay, you're in this situation. What do we do to try to manufacture the win? Because at the end of the day, that's what they care about. And people, oh, I can't believe you're married to that. But dude, you don't have to worry about it. I'm married to her, not you. Like, I mean, that's what an investment is. Like, as long as they like it and they're happy with it, just don't be a hater, man. Like, let me leave you out with that. Don't be a hater like that. There's enough of that shit in the world already.
I was going to say, I think we all need to be more kind to each other. The nature of the internet obviously becomes, a place where people aren't kind. But at its core, I 1000% agree with you. Because I'm a creator, you're a creator, you're putting yourself out there. I cannot for the life of me think of going into someone's comments and trying to make them feel bad about themselves. Like, constructive criticism, different, like having a debate, but make them genuinely, like, there is something fundamentally wrong with your life. There is an internal issue if that's where you get your happiness from or your dopamine from. And, I think if you're on a journey of success, obviously that's not something you can get wrapped up in. Last question for you, TJ. I mean, obviously you've grown the portfolio massively. I believe you've doubled the account twice. It's a lot more money than when you were driving Uber. How do you think of the future of your brand, the Wheel Deal Guy, the hedge fund, and overall how you want to grow the account?
Yeah. So the North Star is 100 million. I told you that the first time we talked. The North Star is 100 million. Hopefully we can get there, 10, 20 years. I don't know how long it'll take, man. But that's what I'm shooting for. That's what do y'all call it in business school? The BHAG?
BHAG. The big, hairy, audacious. Dude, when I learned this term, I was like, I need to drop out of school. This is what I'm paying tuition for, the BHAG. This is the dumbest shit ever. But yes.
But that's my goal. It's something that I can't even really quite fathom it, but other people have done it. And I'm like, why not me? Like, why not us? Like, why not us? But I want to show people a strategy that is duplicatable, that's repeatable, and there's a lot of consistency there. I think this gentleman Marcus, I don't know how to pronounce his last name, German dude, he's the one that like systematic, repeatable, consistent. And then I'm almost done with the book, TJ the Will Deal, Manufacturing the Win. So I want to put it out whenever we get to 20 million or so. I'll release the book. I think it's premature because I wanted to do it if I ever reached my goal, but it's the methodology is already there. So the only thing is that's going to be lacking is the results, right? So I'm like, let me just put it out there and y'all can just kind of share the journey, and it'll encourage people to follow me on YouTube and Next, because that's where the journey's played out live. Shout out to Manish, Bill White, Alex, the people that helped me put together this book. And we'll be doing a couple of Wheelers episodes to help me polish up certain topics to make sure that I'm giving them the nuts and bolts. And I ultimately wanted to become the Bible of wheeling, if you will. That's my goal for the book. So I'm hoping to grow the brand to the point to where I'm looked at as someone who's gotten it right a lot, gotten it wrong a lot, but I was transparent the whole time and I didn't shy away. And I was willing to admit when I got it wrong.
Yeah.
Because it's going to happen, dude. It's going to happen. I promise you. There's going to be a stock or two that's going to kick your ass. And it's okay, but learn from it.
And there's going to be a stock that makes you wait. And there's going to be a stock where you're like, how does the market not get? That is part of the adventure of saying you are courageous enough to allocate your hard-earned capital into individual equities. Like, that's the whole point of the game. And if the game was that easy, first of all, it wouldn't really be a fun game. Like the pain we went through with Palantir is what makes the Palantir journey so fun now on the other side. But not expecting that pain to happen is not being realistic about it.
Absolutely. But anyway, another thing I wanted to talk about, because sometimes I comment on you guys and people are always like, what happened? Why isn't TJ on the channel all the time? So I'll start it and admit you can tell them. But when I graduated to this strategy, you reached out to me and you were like nervous because it's a lot, it's a lot.
Yep.
And the last thing that you wanted with your platform getting so big was people following me into these types of trades and then not knowing how to manage the trade and potentially blowing up their account. Like, that's not something that really sat very well with your conscience or mine either. So that's kind of the reason why that segment ended. It's not because, I told him that his girlfriend was ugly. Because people, they try to create narratives that just aren't there and that they're not true. So
and I think I talked about this on the channel before. For people that thinks there's beef between me and TJ, no, it's just TJ started getting to a point where he's doing very complicated naked strategies, which is the reason we started our option selling tutorial thing, is because if you had $2,000, you could watch that every Friday, which we did for like almost 8 months, and you could understand what we were doing. What TJ is doing on Tasty Trade, paying hundreds of thousands of dollars in commissions to execute these complex trades, not everyone can do that, and definitely no one should try to do that given how risky it is. You have to really be a professional at it. So that's the only reason.
I'm going on 6 years. I'm 6 years into the journey, guys, and I was not ready for that. Hell, wasn't ready for it a year ago. So I paid a year in tuition, and now I'm ready to print. So now I'm ready to print. I do think that we are going to get to that 7 figures a month. That's kind of the North Star, and I feel like I could do that. Put that together 3 or 4 years, boom, we can get to that North Star of 100. So that's what it is.
Everyone wants to see the dog. Can we see the dog? Is it there?
I don't know, but got him. Gavin?
Is this a new one? No, Gavin. Yeah, Gavin's. You got him a year ago, I think.
D-Money, come here, buddy. Here's Gavin.
Oh man, he's big now.
Dude,
I remember when he was small. Wow.
Yeah.
Dude, I need a dog, bro. I think there's too many signs telling me to get a dog.
Yeah.
I think I need one.
Dude, these dogs, bro, they're hold on. I got the Duke of Wall Street right here.
Oh yes, then there's Duke, right? Yeah.
These are my office mascots, man. My wife drops them off like it's doggy daycare. So it's cool, man. It keeps you from like feeling lonely, because like selling options and like being on YouTube and Next and whatnot, it's kind of lonely, like it's like people don't realize how much we rely on the chat because it's like our virtual
chat is the only friends I have in
in
life, bro. All these people call me Gail. These are my best friends. It's a toxic relationship, bro. It's such a toxic.
Yeah, it's awesome. But anyway, Mick, keep up what you're doing, my man, and I look forward to coming on as this Palantir trade progresses and we can kind of share the results.
Yeah, we'll have you on like once every quarter, get an update. TJ, thank you. There's his YouTube. You guys can subscribe to him there. And we will see you next time.
Take care, brother. Bye-bye.
Thank you, TJ. Bye-bye. All right. Well, that is Mr. TJ, the wheel deal. That is what we got for the day. You guys, again, can follow him on YouTube. I would link his X, but is it not working for... Oh, no, it just started. Oh, wow. Okay, now I can link his X. It just started working for me again. Yeah, it was gone for like an hour. All right, so here's his X. You guys can follow him there. And yeah, that's what we got, guys. That's the market for today. We'll be back tomorrow. S&P flat after hours. Bitcoin kind of flat. S&P, yeah, basically flat. We ended green on the day, which is good. Hopefully we can keep up with that green. But that is what we got. And I hope that was, good for people that are just trying to get into the option world. Again, TJ is doing something a bit more risky in regards to selling options in a naked way, which is just a lot more complex. Obviously, you saw the commitments he has, 45 million, 50 million of all this stuff. That's the average person, including myself, can't handle that. But if you go back to the playlist, I made this playlist back in 2024 just on my channel. If you look at all of our option videos, you can watch Options 101. And then me and TJ traded with $1 million. So with that $1 million, we were able to sell a ton of options on Shopify and Hood and all these different names. And that's when, Shopify was 50, Hood was 20. And so I think it will show kind of a framework of if you had $1 million, how would you sell options, and scale that down to 100,000, scale it down to 10,000. But the same framework applies. Okay, so that's what we got. That is what we got. And I'm serious, by the way. You guys are my only friends in the chat today. Dude, my mom texted me today. She was like, I'm worried about how you're talking about Trump. I'm like, Mom, I'm not even like vocally criticizing Trump so much. She was like, yeah, but now you have a lot of people watching you. I'm afraid of how you talk about Trump. I'm like, I'm not even like aggressive against Trump now. There are some things that you have to call out and criticize and praise at the same time. But my mom texted me today. She's concerned. She was like, I don't know if you're talking about him the right way. I'm like, Mom, trust me, there's a lot more people that are a bit more pissed off at Trump and are expressing how pissed off they were. But we had a green day today. So hopefully if my mom saw some of the comments you guys leave in the chat, especially the ones that are not a fan of Trump, I think she would think that I am saying literally nothing. Nothing. No, my mom's not MAGA. My mom voted for Harris. She's the opposite. She's saying it because she's like afraid that I'm going to piss off people who are MAGA. She's not saying it because she loves Trump. Don't get it twisted, bro. She is not a MAGA mommy. She voted for Harris. I remember it was like November 3rd or something in 2024 before the election. And I just came, this is when I was still living at home, and I came back home and she had Michelle Obama on the big TV and she was like crying, listening. I was like, oh my gosh, bro. So yeah, my mom, she wouldn't vote for Trump in a million years. That's just who she is. My dad was about to vote for Trump. He came back from the voting booth. I was like, who'd you vote for? He was like, I voted for Harris. I was like, why? He was like, I think Trump is too crazy. I was like, okay. That's the beauty of this country. Everyone has the sovereignty to make their own votes, no matter who you are. And that's why this country is the way it is. But yeah, were there any other headlines we didn't cover? I think we got through pretty much everything. We won't have Technical Tuesday tomorrow. Oh, my Substack. So we are getting back to the Substack grind. First article will be out in 2 hours, 8 p.m. We'll also have a daily recap today. So we will have the Substack out in about 2 hours. If you're subscribed to it, you will see it in your email. If not, you can subscribe right here. It is free to subscribe. And my goal is 1 article a day. And I have all the topics. I wrote a bunch of articles over the weekend, but realistically, I said this a while ago, I want to wake up at 4:30, and from 4:30 to 7:30, I want to write for 3 hours. Now, I hate writing. I'm not a fan of writing. That's why I talk all day. I don't like writing. I really don't like writing, but I also like having a challenge, and I've been talking for 3 years, and as much as I love talking, I am the type of person that needs new challenges to embrace, and there is something really beautiful about putting together a piece of work, writing it, putting in the charts, the graphs, making a coherent message through the written word. And there's a lot of people in finance that like to read from the written word. So my goal is going to try to be at least 3 articles a week on a variety of different topics. Not all deep dives on stocks, so I can't deep dive 3 different stocks a week, but there's a lot of stuff that I would like to say. And so I want to embrace that challenge, and hopefully we'll get that going this week. Do you normally wake up at 4:30? No, it's something I have to work up to, but I woke up at 5:50 today. I slept early though. I slept at like 11. It's not really early, but it's like enough for me to feel that it's better than 1 or 2 o'clock. So we got to see if we can get to 4:30. Bro, we barely know how to read. Dude, the funniest thing was when TJ was like, yeah, I got my account from 5 to 15. And someone's like, oh, I got my account from $5 to $10 last. It's just different scales, right? It's just, one thing I do love about the finance community, which is really important. I saw a lot of this in the chat. And, I've talked about this on X. When someone is talking about their success and how they went from like 5 billion to 10 million, in the finance community in particular, there's very little jealousy or toxicity of how that person did it. There's a lot more curiosity. And I think that's very different about finance versus other communities. Trust me, there's a lot of different toxic elements of finance. But when people have made money, like if you post a screenshot and you made $100,000 on a trade, the gut reaction, I don't think, is for people to be like, oh, I hate that person because they made so much money. It's like, how did that person do it? And I think a lot of people in the chat, based on the questions you were asking as well, based on how curious I was 2 years ago around TJ's strategy, I was like, how are you doing it? Whether or not I adopt a strategy is a different question, but the finance community is very open to new ideas, new strategies, new concepts, because we're all trying to make money, right? We're all trying to actually, find a different form of financial mobility. And the only way to do that is to explore different ideas. That's the beauty of the meetups. I mean, there's so many things and so many connections that I've made from the meetups, and so many other people have as well. Because you're in person, you get to actually sit down. I mean, I remember in Boston, I forgot who I talked to, but it was someone back in April of last year. And we just spent this was towards the end of the meetup. We just spent 30 minutes talking about covered calls. And they texted me a couple of months later on, how much it really helped them. But just like having that intimate moment to talk to someone in person. Definitely in person. Yes, we are all just in the arena. Exactly. Which is not easy to be in the arena. Especially when you have a new haircut and put yourself out in the arena. A lot of you guys like this haircut though. Dude, I spent the past 4 years, again, I don't know if I have to bring up Al-Qaeda Amit again, but I spent the last 4 years thinking short hair was not going to work on me. I don't know what it was, but I spent a long time thinking short hair is not the vibe. And so I kept this long hair for so long and this freaking big ass beard. And short hair is the vibe. Bro, this is crazy, bro. This actually, you guys let me get away with this for 4 years and you kept watching. That's like what you kept watching. I don't know how, dude. We need to go through my old videos one day. It's been enough time where we can go through the old videos, right? Like it's been a while. Dude, look at these thumbnails, bro. Look at this shit. Why did Kathy Woods by 28 minutes? This is when I was putting my face in the thumbnail. I actually thought people would want to click on my face. Which is like, no, but like you guys kept clicking. Why Palantir is the stickiest business model. Look at this shit. I just woke up, bro. I definitely just woke up, bro. I remember this day. I had to go to work. I literally look like I just woke up. And I did just wake up. That's when we were talking about Big Bear. Look at this. Peter Thiel's master plan. Palantir this, Palantir that, Palantir this, Palantir meet Kevin, hate Palantir, Palantir. It's just like 3,000 freaking videos of Palantir with myself in the thumb. The odd similarities between Palantir and Tesla. It's just okay. Whoever said Ayatollah Amit is crazy, bro. That is worse than the person who said it's a husband for Amit, not a wife. When TJ was talking about that, Ayatollah Amit is actually crazy. HB Real, thank you for the super chat, Amit. Love the stream. Having TJ on today was very informative. Love all your guests and their shared experiences. Bring a lot of value to the channel. Thank you, HB Real, for the super chat. Deeply appreciate that. And I want to get a lot more different guests and diversity of content. We're actually, in conversation with a bunch of different people to become like full-time contributors on the channel. and like pop on every week. And these are people you don't know. I'm not like, not just Tanner and Chris and Steve. They've always been part of the rotation, but like different people. And I think you guys will enjoy some of their perspectives. Some of these people specialize in very niche things that they're able to talk about. And so hopefully over the coming months, even coming weeks, to be honest, we should get a lot more contributors. That's what we got. Sachin has been busy. Sachin, I would love to have him on again. Sachin left his job, then he came back to his job, then he left his job again. Then he made like $1 million in SoFi last year. So I think he quit again, then he went back. Like, I don't really know exactly what's going on with Sachin. I hope he's going to go to the Singapore meetup. I'm going to hit him up about that. And I should have the link for the Singapore meetup tomorrow, so I will put that out tomorrow. But yeah, Sachin is just, he's also in Malaysia, so like usually, we can get these people like once every couple months, but it's hard to get them on consistency. But Sachin was doing the Palantir weeklies with me consistently back in freaking 2022. If I pull this up, yeah, look at this. The first freaking earnings that we covered was me, Sachin, and Chris for Palantir.
Here we go. We are here. We got Chris.
This was when the stock fell, I think, to 12 that day. Did we get the raw reaction? No, we didn't. We okay. So this wasn't on the actual price itself, but this was when the numbers came out, and then we had this is when Karp was in person for the call. Yeah, I remember this call really well. I made like 7 videos off of this call because I reacted to 7 different things Karp said, and it turned into 7 pieces of content for me. It's just a different grind. Just a different freaking grind. Mary says, holy moly, hard to remember that time now. Dude, yeah, that's like, time is moving fast. Sachin was all in on Palantir. That's correct. Sachin was all in on margin on Palantir. Meet the guy who's all in on Palantir. That was the title of this video. Yeah. This was, what is this? February 2022. This is when Sachin explained why he was live. We still had the bricks in the background. Shout out to Cam. Cam is one of the OG Palantir guys as well. Just a wild, wild time. But again, that stock took 2 years, right? So when people are like, well, what's the next stock? Well, how does it move? It's like these names, they just take some time. And like, at least my approach is try to find a fundamental story that's growing. It might not do the, SanDisk 180% in a year, but if you find it, congrats. If you find the memory bottleneck and you're able to go, but if you don't find it and you still find a fundamental name that you think should be higher than what it is right now, but it's not, that was the story with Palantir and Hood and SoFi and Rocket Lab for multiple years before you saw something. Definitely for Tesla, it was almost for a decade before, that story evolved. And I guess sometimes you need a bit more patience as well. Chris will be at the LA meetup as well, so you guys can give Chris all the shit you want for Palantir. He's already prepared to deal with it. But I'm sure a lot of you guys will be happy because of VG. Even at the New York meetup, everyone was going up to Chris, be like, yo, Chris, VG. Chris, he just got tired of it. He's like, bro, I like it. I can't tell you to buy it or sell it, but I like it. And thankfully, that stock has doubled from now. Chris said he doesn't want to talk stocks at the event. Dude, he's going to end up talking stocks at the event. He says he doesn't want to, but Chris, you can get Chris yapping. You just you just got to mention one thing and then Chris will just go off and start yapping. And so, you go up to him, you catch him early, just be like, so Chris, what do you think about natural gas? And he'll just go on. And he will keep talking. So we'll probably get some good stuff out of Chris. All right. Is that it? Are we done? I think that's pretty much it on the day. We'll have the Iran launches new wave of missiles towards Israel. Dude, it was so nice for the past hour and a half to not talk about the war. It was so nice with TJ to just talk about something other than the war. Hopefully, again, there's so many comments back and forth from so many different people about it ending soon or not. I really do think, based on how Trump talked today, he's trying to. I think Trump is trying to find the off ramp. I really do. I don't know if he'll be able to, but I genuinely think he is tired of this shit. He doesn't care about freedom for the Iranian people anymore. I don't even think he cares about the nuclear weapons anymore. I think he genuinely is done and wants to move on and wants to negotiate some type of deal that maybe delays them for a couple of years and we go forward from here. But I think now it's a little tough to just get out of it. But I do think he genuinely wants to be done with this. I think that's pretty much it. I don't think there's a lot of other crazy headlines here. Well, that's pretty much it. That's pretty much it. We talked about that Spotify headline. We talked about the Apple foldable stuff. Oh, Politico. The Trump administration is quietly weighing Iran's parliament speaker as a potential partner. Wow. And even future leader, as the president signals a shift from military pressure towards a negotiated endgame. By the way, this same guy, Mohammed Bagher Ghalibaf, is reported to be the dude that Trump talked to last night. So when Trump says he talked to Iran, I think he's talking about this guy, the parliament speaker. He's 64 years old. He is seen by at least some in the White House as a workable partner who could lead Iran and negotiate with the Trump administration in the war's next phase, according to 2 administration officials. Okay. Maybe, just maybe, we're getting close to the end. Maybe. We'll see how this ends up playing out, but we are so tired. Yeah, I think we are all just so freaking tired. It's been 3 months of back and forth on this, and maybe we have to go another couple weeks, but hopefully we get this thing done soon. And then the inflation data can start getting better. Labor market data can get better, but we just need this thing to end to be able to get there. His name is literally, his middle name is Bagher, which I'm pronouncing as Bagger. Maybe if we pick this guy, he will allow us to get some multi-baggers on these stocks because the war will end. But the time will tell. What's the video for options trading? Let me link it right here. It's options 1. Oh, I need to put this on the website too. I need to, yeah, this should be on the website for sure. But I'll link it right here in the chat. All right, cool. So that is it. We are done. We'll have a new article out tonight. We'll have the daily recap out. I think that's pretty much it. I don't think we have to do anything too crazy. Tomorrow, we are not going to have Jason on. We'll have him on Wednesday. We'll try to get Chris on tomorrow, get some Macro Tuesday into this. Yeah. Well, that is it. That is a word of the day we did in the morning. I need to also put a word of the day section on the website so we can at least reference what are the words of the day, because I forget them right after we introduce them. So hopefully we get that done. All right. Thank you, everybody. Appreciate it. I'll see you guys tomorrow in the market open. We'll have a daily recap out later, and we'll be back tomorrow, and we will keep going from there. Thank you, everybody. Appreciate you all. Love you all. See you guys tomorrow morning. Bye, everyone.